you can hear me, just in case you can't, I'm having some complications setting the stream up. I don't know if my audio is working or if it isn't working. But because it wasn't working, I reduced my risk on this short. I initially had 6 slots total, two here, but I reduced the risk since I am trying to sort the stream out, and I do want to explain what I'm doing. However, I want to make sure you guys can hear me first of all, so that if anybody comes back and watches the video, it's not just silent. But give me a second. If you can't hear me, if you can't hear me, I will sort this out. For some reason, my Wi-Fi is not working, but my PC, everything's working. My phone, working. Laptop, iPad, nothing. Annoying, but I can't check if the stream is working. Yalla, whatever, man. Explain this. Okay, look. So rejected from here. Rejected from here. Why is it unclicking? Right, one more time. We rejected from here. Let me just move this. This is okay. We rejected from this place. And then we came up here and we rejected on that 5 minute candle right here. Okay. And as soon as we closed and we rejected, I entered. Right? And then we got a surge in volume. I entered more on that candle. We got a surge in volume. And now we're looking to see if this retest of this trend line is it a confirmation for us to keep going up, in which we will hedge or just cut the position, or is it gonna reject bouncing on the support and just continue to drive down to our take profit, at least to like the mid of the range, but the lower end of the range. But we'll be able to see right now. I just do hope this is all working and smooth. have to see if this is a double top. We can see that in the 1 minute. If we get three red candles, just consecutive three red candles driving down the price, we'll more than likely see a continuation, and this will be a double top. If not, we'll get a breakout, and then we get a continuation of this. So you see here, we failed the double top, we broke out, and now we're just in a uptrend. Just keep driving up until we hit a point of resistance, of major resistance, which I think is close by. But at the end of the day, this is an uptrend, and taking a short here was very risky. It's never a good idea to take a scalp short on an uptrend, but it was just super clear for me. And it still is. It's not like, hey, it broke out, it's over. Nah, I accept the market is a wave. It's going to oscillate. I'm gonna let the market do what it does. I accept that it's manipulated, and I'm not gonna let the manipulation stop me out. With experience, I can identify where I'm wrong. I can identify where a trade is actually, hey, this is going to continue driving up. And now, just because it broke out of a little trend line I used to enter short doesn't mean it's wrong. It just means it's probably gonna take more time. But if it is wrong, we'll manage our risk accordingly, you know? So yesterday, when I went on the stream, we entered some buys here. Entered a buy here. Initial buy was over here. We closed this buy at a profit. Price drove back down, and we closed this at break even. And price continued to dump. So let's say if we kept that buy in, and we're like, oh, this is dumping, dumping, dumping. Little do you know, the market is a wave. It oscillates, and you drive back up. So if we did hedge under this, we would have possibly taken profit under this next consolidation zone, where if I do drive it, it just meets it there. So where price previously consolidated. So it allows price to discover a zone in which price is consolidated in before and see if it respects it. As soon as we see some sort of consolidation, we can say, okay, now these local supports are important. We shouldn't break them unless we're going to go to the next consolidation zone, then the next one. But for now, it's we drove back up, and if we kept those buys, then the buys would have still been good. So even though this does trickle up way above my position, 17 and a half pips, I don't mind. It's going to oscillate. Now what I'm thinking is exactly what I just said before. Are we getting a repetition of this pattern right here? This little U where it comes down and keeps going. We have a U, it comes down and it keeps going. We want to see if the pattern is gonna fail when it comes down here. If it drives down violently, we can say, okay, the probability of it continuing down is higher because we did break this pattern that happened over here. That's how I think in the market. It's all about pattern recognition. What has happened before? How has it played out before? And what's the likely outcome that is going to continue driving down if this pattern does fail? So we answer those little questions, and we just take our intuition and we just go with the trade, you know. But for now, let's not look at the 1 minute, since we did see that that double top was not successful. Where is our next point of interest? What are we looking for? Let's see. First, I'll just like to think that what has the market done at this price before? Around 2036, not this exact price, but this range. So here we went down, here we spiked up, we went down, here we went down, here we went down, here we went down, here we went up, here we went up, then it started going down, here we went down, here we went up, 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 down, 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 up, down, down. So this is a major point of volatility, but at the end of the day, I can just balance them out by looking to say, hey, 1, 2, 3, 4, 5, 6, 7, 8, 9. Uh, let's not count this as an outlier, but it did go down. 10, 11, 12, 13, 14, 15, 16. Maybe 17, maybe this one. 18, 9. So it's just like this price over here is a major zone for it to start reversing. We want to see if this is maintained. So if we take our stop loss, I just use a stop loss to project the losses. I don't usually put stop losses. I usually hedge until the next important zone. So we'll be down around 2.2k. Now you might be saying down 2.2k to make 200. I don't think I'm going to be down 2.2k. That's the way I like to think, in that I let the market breathe. It's only lost if you don't have capital to continue trading. You're only lost if you can't live to trade another day, right? That doesn't mean you enter max size, and as long as you're not liquidated, you're good. I only entered two lots. This account is 21,900, almost 22,000. So if I go down 3k, I don't mind. You might be saying, "Oh, mullah, that's more than 10%." Sure, no problem. I don't think like those traders who say, "Oh, I'm going to risk 2% to make 1% and compound it over." Nah, I'm here to make money. Right? I'm here to understand what am I getting involved in. And right now, I am getting involved in understanding and recognizing that price will oscillate. It's a wave. You have to learn to ride the wave. You can't let the wave just crash onto you, get stopped out, crash onto you, get stopped out. For me, stop loss is very situational. It's not an everyday, every time I trade thing. It's maybe when I'm already in profit, I'll put a take profit at a specific zone. Hey, I want to save this amount of money. I don't want to win less. I want to make this amount. I want to make 3,000, let's say. As soon as price, I'm at 3,500 profit, 3,800 profit. As soon as it goes to 3,000 profit, it won't let it go under then. Maybe I'll use a stop loss then. Or not even in a news day. In a news day, if I do trade news, it would be a limit order, a buy stop, a sell stop, buy limit, sell limit. But I would never mark it in and just put a stop. The spreads will just more likely 100% get you stopped out if you're trading news. Well, yeah, pretty much that's what I'm saying for today. I'm trying to see how price respects this range. Yesterday we did have a bias to fill 2035 to 2040. We did fill 2036 and then just started to dump during New York. So possibly we get the same type of reaction, or this is invalidated. We head up here to our big megaphone, whatever this is, pattern, and little inverse head and shoulders breakout test here, and then we start to drive down. So yeah, it's just a point of interest right now. Max pain at this trade will be around 2,300, 3,000, but we'll see how it is. At the end of the day, if it does continue to drive down and it does start to look aggressive, we can let this swing. We can let this swing. But for that, we have to determine are our higher time frames bearish, bullish. Macro, in the long term, I'm bearish on gold, but mid-term, short term, we do have high potential to keep driving up. And when I say up, I mean either up to this range here, which is 2046, 2060, around this range when we get a breakout and we start coming down. But at the end of the day, I do expect gold to keep going up. This is just a little scalp. And if we do go up there, yes, I will be looking for shorts. If it does look like it's rejecting, it starts looking weak, I will be looking for shorts while being in this position, right? But that's only if it does go up there. So we'll see. We'll see what the more likely outcome is. Yeah, super bullish so far. I see. I have no idea where. Thing is, I'm trying to test the stream on my laptop, but I have to do it on my desktop now. My laptop is not connecting to the internet. Okay, there. المهم, hope you can hear me, man. Pretty much, this is very bullish now. Very bullish. But market's gonna wave, it's going to oscillate, it's gonna do what it has to do. I'm trying to see how price is maintaining at this level here. It's just in history, this level indicates a quick reversal. Here you're bullish, start going down, up, bang, down. Here you're bullish, bang, down. Same story, same story, same story, same story, same story. Here, you're very bearish, go up. So this point is a major point of volatility, which is why I'm not worried if this drives up a lot. Even if I was still in these other positions, I would have been down like 27, 2,700. But I would not mind that at all because I just really understand that this point is a major zone of volatility. We might want to fill this, which was yesterday's plan, but how are we going to respond after that? How is the price going to respond now? Is it going to do it pre-session, pre-New York, late London? Is it going to do it now? So, is it going to dump and then do it in New York? Well, so we'll have to see and find out. But for now, I'm just letting it do what it wants. Even though we have these huge momentum candles relative to these, I reckon it's not a big problem at all. The really important point in price right now. What I look for is reversals in price action. So you see how we were moving up just clean over here, started to chop, moving up. Now it's starting to weaken, right? So we're either gonna have an impulse move up or we're gonna continue to consolidate. What we want to see is continuation and consolidation of here, right? At this zone. We want to continue to consolidate. We don't want to break out. Even if it does, just we want to consolidate at this zone and eventually see price start to drive down. This point specifically is what I would see is important because we keep doing the same analysis. And is this gonna keep driving up and consolidate and then keep driving up? And then if it does drive up, it's gonna consolidate again. Based on price action, we determine, hey, is this gonna continue going up or not? Until the pattern is broken, where it's you see up, two candles down, up, two, three candles down, up. Here it's starting to be different. Up, two candles down, up. So as soon as we see a difference in the movement up, we can start to recognize and really look for how these candles are responding to their local highs. Are they wicking down when they're getting there quickly? Are they breaking up like it's doing now? So here we can say this is stronger. It's not as weak. But if it was to go wick and come back down, I would say, okay, the sell side liquidity from this spot is much higher. There are more sellers at this point. if it does start looking weak, I'm definitely gonna enter more short. Definitely. Meet it at the halfway like I did yesterday and close that one, or it goes back down here and close that, and then close the first position, keep the second one open. There's many ways we can manage the risk because we are getting close to the zone. We are getting close to the zone, and the closer we are to the zone, the more interesting it gets. Right here, I'm just let it swing, let it do what it wants to do. If it wants to find a reason to break out, we're gonna see that gonna it's gonna be stronger. But for now, it's like let it play, let it dance around as much as it wants between the zone, like this. So yeah, pretty much. We have how long left to the session? There's still a lot of time. We just started. Yeah, we just started. 11. Yeah, there we go. Yeah, because we can build a position and B swing short and take profit around this zone. Around this zone here. And if we add four more lots, that's 369. That's around 12,000 if we do swing it down here and we stack our positions. Maybe two here, and when it drives down, take another two. But yeah, pretty much that's the plan. I'm studying for my economics lectures and everything meanwhile, so I'm not really interested in taking a lot of sides, but I do have alerts set up all over on TradingView, so if they do strike, I'll know. I noticed before the most of the volume was in Asian session, but now it's coming back to London, which is an unexpected flip. I entered that short because I was aware that most more of the volume recently was in the Asian session. So I assumed a quick rejection off of that trend line, and all of a sudden the volume shift came in right here. I closed those positions. I'm like, just in case it's a bounce and a retest to the upside, I do not want to have three uh three times the risk I put on initially. So I just went down to my initial risk. I closed these at a profit, nothing profit. So basically break even. I'm not gonna call this profit, no way. But pretty much. So if I was still in those positions, it would be fine. But we would have something called less opportunity cost. We're not gonna have the chance to take bigger opportunities because we have a lower margin level. So if let's say for example I have 20K in this account, if I use 10,000, I only have 10,000 to trade with. Let's say if I used 18,000 out of the 20, I can't use the 2,000 because if I do, I won't have enough money to let the trade swing. Like if this was a $5,000 account, this would be a problem. You should never be down that much on a $5,000 account. I would say on a 5,000, you should be down maximum 750, 1,000, maximum. And that's like, wow, you should never enter that trade. But for me, on a 20K account, I don't mind being down 3, 4. I don't mind it at all. Because the margin required for two lots is only 1,240. So that means I'm down the total amount I put in and a bit more. But I do have I have so much equity to hedge. Some people would just, oh, close the trade that went wrong. I'm not like that. It's not that it's wrong, it's just the timing was off. Timing the market is what makes you money. Now, if you try to time it all the time and say, hey, I think the market's gonna move up now, I'm gonna buy, okay, it went down, I was wrong, let me close it. You're gonna give yourself a headache. I've been there. And that's not the style of trading I like to do. I like to take lower position sizes and swing them for higher. What I would usually take is 10 lots. That's $6,000 of the capital. So that's more than 25% of the total account. But my invalidation zone would be very close. What's an invalidation zone? Where I say the trade is wrong. Here, where I say the trade is wrong, out wrong. Hey, I have to do something about it. Is where is just move back. If it breaks out of this trend line, so you see this trend line here, you see this downwards trend line going there. If it breaks out of this point, I'm gonna be like, okay, this is really bullish now. The next move up, I am hedging or closing. I'm figuring it out from there. But what I usually do with 10 lots is it will be such a close invalidation zone. I don't want to cherry pick, but let's say, let's just take this trend line for example. We have an uptrend, I have a bullish bias. I would take 10 lots here. But I wasn't trading here and I wouldn't trade this, to be honest. It's just too low volume. Take the buy here, and if it crosses under here, so like let's just go buy limit. If it cross, this is supposed to be 10 lots. Let's multiply by 10, so it'll be 1,000. But let's say our invalidation zone, let's adjust it for a little bit of spread. So we would lose 1,300, but the upside would be, hey, let's trade it to up here and let's trade a little breakout. So we'd make like 4,000, 5,000 on the. But that's if all the stars align. But for now, I recognize, hey, we're in an uptrend. I don't really want to short an uptrend, but I do see this trade idea. Trading is all about intuition. My intuition is telling me, hey, clear pattern. Unless this pattern breaks, then we're like, then it's gonna be a problem. But what's the problem now? Where is it gonna go next? Can I identify that? Yes, I can identify it. The more probable outcome is for price to retrace back to this trend line, if not just drive back down. But for now, we're bullish and price can retrace back to this trend line. If we break this, then it's this local level right here. How many pips away is that? That's 44 pips away. From here, it's another 23. So we'll be down like 120 pips on that, right? And then we'll have to reevaluate what happens with the trade. But for now, it's just I understand that it's more probably gonna go up here, so let it do it. It's not like there's no zone. A place where I would feel uncomfortable holding a position like this is if this was all-time high. I would never just short and let price just discover a new price. You're in something called price discovery, where you're in a price you've never been in before, and now you're saying where is this gonna go next? You don't know because there's nothing to the left. Price has never been there before. Price is discovering where is a comfortable level for buyers and sellers to meet and agree that this is a fair price. And what happens when that happens? When the buyers and sellers agree, is you get consolidation, right? But we're not at all-time high. I have things to my left. I have trend lines. I have supports. I have resistances. We broke this resistance, and now next is this resistance in confluence with this trend line. So that's pretty much the goal. That's pretty much what we're aiming at. Let me turn off this non-aggregated, right? But yeah, just highlighting the psychology of how I'm thinking in a position like this. Most people would be terrified to be in a position like this, but I recognize it could have gone wrong, which is why I entered two lots, not 10, right? Plus, gold hasn't been moving much in the past week. I'm not gonna lie. It's for me. I don't trade the gold in New York session. I probably should, but because I'm in Australia and I am a student, I do have to incorporate my trading more into London and Asia. Okay, next interesting point is here. Notice pricing starting to slow down, right? We got the 1-2 up, 1-2 down. It's not a red candle. Up, 1-2 down, up. Now, what's price gonna do? Are we gonna break the high like we did before and continue uptrend, or is it gonna break down this level here and confirm this to be weakened? And we see how buyers and sellers respond to that level right there. Because if we draw a clear trend like this, look how exact this is matching. So we drive up, come back down, drive up, come back down, drive up, come back down. So it's getting shorter and shorter. So we're trying to see when it's closer to this level, maybe not at this level exactly, how is price going to respond? If we don't want to put a line and we want to make it a range, we can put a equidistant price channel right there. Put it to the bottom, right? Where this zone is attached to this zone and the height of this candle will be the body, from the bottom of this body here to the bottom of the wick. Now we have a range, right? So price is coming back down to this range because many people who do have this trend line drawn exactly like I do, they have different prices and it might look different, so we have to take in consideration that it might deviate a little bit and we make a range instead of a line. So is it going to do a 1-2 up, or is it going to do a 1-2 break and we start going to the downside? That's my next question here. So here's some place where I would take another short and I'll put a stop loss. Hey, if this goes down from here, great. I can let it drive down, put stop loss to entry. If not, I'll just let it take a few dollars from me. You know what I mean? So let's try to get a really high price. Let's try to get it here, right there. Right there, and I'll put a stop loss for this one around here. Yeah, around here. Yeah, around this level. Around here. But if this breaks this trend line, what's my objective? It's to put my stop loss to entry. If it's to entry, then I can be like, okay, if it takes it, it takes it. If not, it's fine. Because here, if we meet it halfway and it does dump, and the reason I'm putting a stop loss is because we're not confirmed in a downtrend. This is still an uptrend, no matter what I say. So I'm managing my risk onto the second trade by putting a stop loss. It's a mental stop loss for now. I will just go ahead and close it. But for now, if it does go into profit and we do violently break this, it's stop loss to entry, and I can manage my risk with this trade. It's I tried to get it as high as possible, hoping this would reject, but we'll see. We'll see. I'll actually wait for the 5 minute close. I won't just enter. I won't just exit the trade blindly. So I'll wait to see how this 5 minute closes. We've had all of these candles green. That's 4, 8. That's 10 candles. That's 50 minutes of green. So maybe we can start reversing here. And if we do reverse this pattern, we can get a few. We'd want to see 3 red candles. For me, 3 red candles is enough to tell me, hey, there might be a change, and this will confirm a downtrend until it's broken. But if we do go down, we would have our stop loss to entry, and everything will be good. If a beginner trader was trading the way I did right now, the first thing I'd ask them is, how do you manage your emotions? How do you know enough about the market to manage your emotions? That's the first thing I would say. because you should never be shorting in an uptrend. But because I'm taking my experience, I don't mind doing it. I'm not just blindly going in. I know if we break this, like this is a fair price to enter short. If we break and close under this on the 1 minute, I'll move my stop loss to entry. If it hits, who cares? If it doesn't, we only have to go here to be break even. You know, it's just for me. I'll take that trade any day. I'll take that trade any day. Okay, now what we're looking for is that specific close. We have 17 seconds. Excuse me if I move my chart a lot. I am very used to it. I like to adjust it for the spread, but we're trying to see if this 1 minute closes under this range. Okay, because if it does, that's great. If not, did it close? It closed at it. But you know what? I will still move it to entry. I think for us to close under this trend line, it's safe. If it takes it, I don't mind. If it doesn't, it doesn't. It's there's really nothing I can do. Taking a trade here is very aggressive. Taking the short here is aggressive. This is even more aggressive than that. But this is how I manage my risk. So basically now this is free. If it does hit, it says +6, but it's probably gonna take because the spread is gonna shift or whatever. But this is how I manage my risk. People would cut their trade at a loss. I refuse to do that because I accept that the market is gonna oscillate. Now, are we gonna come back down here? I don't know. But one thing I can check is if it does come down to the halfway, to the midline of this whole trend, which is very probable, right? How's the price gonna respond? If it looks aggressive, I can close this at break even. Like I didn't make anything, I didn't lose anything. But let's see how our 5 minute closed. If we check our 5 minute candle, 5 minute close under this trend line and it closed bearish. Now we're trying to see two more of these down here. If we do get two more of those, it will be absolutely wonderful. Absolutely wonderful. We can get a little relief into London and maybe go up in New York, or we go up now and then we relief in New York. So there's many options. There's many options. But for now, I'm this doesn't exist until I'm here. I'm not gonna take profits on it. I'm not gonna I'm not gonna touch it. I'm just gonna see what happens and until price gives me a new direction, a price gives me new information. Because for there it told me, hey, we're slowing down. I just didn't like how it was flat here and then here it starts going up. Here is really aggressive and here it starts going flat. For me, the momentum on this trade is slowing down, right? So I let it go up as much as it can until the previous candle high, and from there I see, okay, you know, let's enter. And I know if it goes into profit, I put stop loss to entry. If it takes it, if it takes it, it takes it. If it doesn't, it doesn't. Nothing I can do. But this is what my intuition tells me. That's one thing. When anybody asks me, how do you learn trading? What do I have to do? One thing I'll tell them is experience. You just have to sit there and look. I don't like reading books. I don't sit there reading books on how to trade. Maybe I've read some Wyckoff, some Gann, amazing traders, but I don't sit there reading books. I also do not like watching videos. I do not know the person's intention. Are they really trying to teach me something or are they just trying to make content? You know? So what do? I just stare at the chart since I was 15, 14 years old. Understood what's going on. I used every single indicator: Bollinger Bands, Ichimoku Cloud, RSI, MACD, Stochastic RSI, Money Flow Index, VWAP. I don't know if I said Bollinger Bands, but I used everything. And what I realized worked the most was price action. I don't need to use those indicators anymore because I understand how the indicators work relative to price action. So when people say, hey, oh, these major hedge funds and these big institutional traders don't use indicators, so you shouldn't use them. I disagree with that. I believe you should use every single indicator, understand how it's influencing price, and then take the indicator away and start understanding why that indicator triggered the way it did, okay? Or why the indicator triggered to go long and you shorted, why the indicator triggered to go short and you shorted. So once you answer those questions with the indicator, you can start to indicate to yourself, hey, I see what's happening in price relative to the indicator. So I see momentum in my mind. I see the RSI. I see the MACD. I see all of those because I understand how they're implemented into price action. But nevertheless, on the 2 minute, we have three red candles just closed. Now we're trying to see that translate onto the 5 minute so we can get some more fluidity in this movement. I said yesterday the markets take the stairs up, but they take the elevator down, right? So we had 15 minutes. All of a sudden, we're almost halfway to this candle and we took out three candles, right? So that's around 7 minutes. We took out 15 minutes. So it goes down twice as fast from this zone as it came up. So we might get a big push down or we might reverse. But so far, we're just letting the trade breathe. Let it do what it has to do, right? We can cut the 460 here. It's a nice place to cut it, but nothing's telling me that I should, to be honest, other than my instinct of saying, hey, let's take some profit. It's always good to take profit. What's telling me that? Because I got an amazing entry. This is the entry I should have waited for, right? This, instead of entering this. But what do I do with that information now? I still feel the same way that if price were to continue rising to this trend line, it's fine. It's not like, oh, I should have taken the 300. I'll lose nothing, but also at the same time, I'll make nothing. But that's fine. Because in the long run, if I stick to my rules and I have a strategy, I'll be good. I'll be good. If I'm constantly shifting, trying to figure out something new, trying to trade something new, it's highly unlikely you'll become profitable. That's what I'm trying to do with people. I'm trying to take traders who are already trading, try to figure out trading, and implement some of my market psychology to them so they can understand how to become profitable. It's like you see these games, some games have ranks where you're at the bottom of the leaderboard or at the height of the leaderboard. Let's say it's a racing game. The guy knows how to race. Let's say the guy who's rank 1 knows how to race, but the guy who is one out of the lower ranks, he also knows how to race. But he understands how to control the vehicle, but he just doesn't understand when to do it, when to go in, when to increase speed. He's good at avoiding accidents, he's good at taking over people, but maybe at some corners he doesn't know what to do. Why? Because he just doesn't have the experience to sit there and understand this has happened before. I should take this outcome because it's more probable. So it's those traders that have a great strategy, right? But their market psychology is stopping them from implementing it to its fullest extent. Okay, the Asian session just closed, so let's see how that influences volume, right? If we do get a 1 minute close here, this is actually pretty interesting for me. Is price going to reverse here? We don't know, but it can give us an indication of what it wants to do so far, right? So unless we're driving up here aggressively the same rate we did, I'm not worried. But if we start doing that, will I close it? I don't know, to be honest. I don't know based on how price is moving now. I don't know if I would close. I'll have to see how price is moving if it does break up here. Will I let it hit stop loss? We'll see also. Based on how price is moving, because if it's giving me an indication that, hey, this is an aggressive move, it wants to keep going up, then I'll just close it. But as of now, there's nothing really. There's nothing really. It's in fact the opposite. So I'm trying to see if this is maintained or not. Pretty much. Because I don't like this trade. I don't like this trade at all. But this is what trading is. You take the risk and you adapt to the market. It's not about knowing when to enter. It's always good to know that will make you money. But how do you adapt to the market? When the market gives you something you didn't expect, how do you deal with it? Do I sit and hope my trade goes right? Do I sit there and implement my risk management strategies? When do I implement them? What is causing me to say, hey, I want to implement it now? These are the questions you ask yourself to truly understand. What am I going to do in this situation? If it goes wrong, where am I wrong? Am I okay with being in this much drawdown? If I'm not okay with it, How am I going to change my trading strategy? If I am okay with it, what am I going to do to make the trading strategy profitable? It's all these little questions. And I'm just thinking out loud. This is how I think to myself when I'm trading. Okay. Since this was an aggressive uptrend, if this does aggressively break up here, I'm just closing it. I'll secure like 350 or something. But for now, it's good. For now, we're good. Let it do what it wants to do. Hopefully, this is a little bear flag, and I do show people how I personally measure bear flags. I don't know how other people do it, but this is what I've learned. Oops, that was not good. That's not what we wanted to do. Trend line, draw it from here to the top of the range. Now we take this. So kind of here, right? And here will be in profit net if it does go there. But depending on how price responds right here, will it invalidate this bear flag? Or will it reject and validate it? So that's what I'm seeing now. Did I know this bear flag was going to appear? No. But now that I identified it, I'm adapting to what the market is giving me. Because I've seen bear flags invalidate. That just means this is a W pattern, which is bullish. Little classic Ponzi pattern. Little double bottom. And then it just continues up. If we start to see buyers come in, no problem, we'll cut. And then if it becomes weak again, we'll do the same thing we did up here. Take the 350, goes down and take another 350, and all of a sudden we notice our net is positive, or our net is much lower than we wanted it to be. Because we can hedge our position too, you know, so I don't like how this is holding this level. We have a 5-minute closure just now. Let's see how that 5-minute closed. Okay, same story. Saw the same thing yesterday. See these wicks? 1, 2, it's exactly right next to each other. The bodies are close to each other. The wicks wicked up at the same zone. I'm gonna mark this zone now, like this. I want to see how price responds to this zone. Now I'm gonna go to the 1 minute, check price action, see what's going on there, right? Is price respecting this zone? Because if it is, that means that this is indicating many buyers are here and their stop losses are down here. It's going to want to take those stop losses. And now when the stop losses are taken, is it going to continue to drive down or is it just going to continue to drive up from there? Second scenario is it doesn't break and it bounces exactly where these two 5-minute candles wicked, and that's right here. I'll go back just so you guys can see, just in case. But we had these wicks over here. 1, 2. Is it going to wick down and drive up again? We need to see if that's validated or invalidated. If it does break down, that means this bear flag is validated, and we can say, okay, this is a bear flag. And if it is a bear flag, what am I going to do? Am I going to add to my position? Personally, no. I don't mind being in 4 because I know if the position goes here, I'm break even. It's really close to it. But if it is validated, what am I going to do? I'm going to take this stop loss and I'm going to put it up here. So if it breaks above the bear flag, my position is out for 340. But for now, I'm just gonna leave it, right? This is what I'm gonna do. I just want to see this close. I don't want to just see a wick, because a wick is a wick. I want to see a close. So pretty much this is back to where it was. How is price responding to the zone? So currently we sold very aggressively down. Price is just stuck there. It's just stuck at this zone. Spread is getting a little bit wider. This is indicating that there is incoming volatility. Is this going to continue? Is price going to wick it again? Is price going to want to enter the zone again? How quickly is it entering it? are bodies of the candles closing more inside the zone or outside the zone? Right now, the body is outside the zone, indicating for me this is more bearish. And until that flips and we get a bigger body inside, we'll will start to not be more bullish, but will be less bearish. Right? That's the way I look at it. It's not as binary as bullish or bearish. Is it how bullish is it? How bearish is it? So yeah, now it's turning bullish or less bearish. Right? We saw this close, though it wicked. It didn't close in the zone, but for now, we're good. That wasn't a fart. That was my mouth. I'll do it again. Just making sure. It's like a screw it, you know? Let it do what it wants to do. I'll adapt to the market no matter what. No matter what it gives me, I'll adapt. You'll never see me say, "Oh my goodness, wow, there's a big." I'll never. I just. This is what it does. The market moves. I don't trade news. Sometimes I do. Last piece of news I traded was Nvidia. It went super well. I'll eventually post a trade review of that this weekend. So pretty much now we're waiting. Our net is we're in 350 drawdown. But pretty much. I don't like how this is just wicking up from here. I really don't like it. What are you telling me? What are you trying to indicate? Do we have a 15-minute closure soon? We do have a 15-minute closure soon. So 6 minutes. Yep, I don't like this. My intuition telling me is to just cut the trade. Am I gonna cut it? I'll wait to see if it reclaims this zone. I don't need to look at the 1 minute anymore. I know that part was less bullish. But you see, now when we look at the 5 minute, we're seeing exactly what we wanted to see. The one, two, three, four red candles. But what did this body do? It closed in the zone. It didn't close out the zone. Now, what I'm looking for next is this 5 minute close. Is this going to drive down, pick up the liquidity within the wicket was in before? Or is it going to start bouncing? What I think it's going to do, to be honest, is I think it's going to fill this liquidity and then come back up. That's what my experience tells me. Is it comes down, takes the orders in the wick, and then starts going up again. But I hope these. I'm not gonna count this break, but one, two, three, continue to drive it down. So yeah, that's what we're looking for now. Yeah, this is starting to look bullish. I don't like this. It's a possible reversal like we had here, except there's no line. Might be a line I don't have drawn, but for now, this is what I have, and I'm using what I have. I don't like it. Yeah, yeah. Still, actually, it's just struggling to get back into the zone. It's really struggling. So, if it does want to flip bullish, it's gonna do it very quickly. We're gonna get an impulse candle, and that impulse candle is gonna tell the market, hey, there are more buyers present. It's gonna be very obvious, and we will deal with it if that happens. But for now, it's really struggling. So we might get a continuation and fill these wicks and just then we do that, or we fill these wicks and it just completely fails and we head to break even, because I'm not a fan of this trade anymore. I'm really not a fan of it. I don't like how this candle closed here and this is still green. This is a 3 minute. Yeah, because now if you determine this to be your bear flag, it's easy, but now when you add this, it just starts looking ugly, and it's not going to look exactly how you see them if you were to Google bear flag. Sure, I understand that, but it's less predictable. And if it's less predictable for me, that means there's other traders out there who are looking at this and saying, hey, this is less predictable to be a bear flag because it's just not, it's forming all over the place. It's not consolidating in one zone. It's consolidating in one zone, dumping, consolidating in another zone right next to it or on the wicks it was before. So is this a dump trend consolidation, dump consolidation, or is this a dump consolidation, dump, and then it just starts rising up, like trickling up, taking the stairs up, as I like to say. But I will be walking away for 1 minute, and I will come back, and we will see how this trade is going. We'll manage it accordingly. Interesting. Because an option is we can take profit on this trade and just let this continue swinging, do what it wants, and we secured 500. It's a very good idea, you know. But just considering how it's trickling down and it's not showing me any reversal, I'm less inclined to do that. So this is what I'm gonna do. I'm gonna draw a little local trend line on the 1 minute. I wanna see how it responds to this. If it does respond at all, but we'll take our trend line. Within this little downtrend, we're going to tag this. We had 1 wick, 2 wick. Now in order, the way I like to validate trend lines is to see if it wicks a third time. If it does wick a third time, I validate that this is an important point. Traders do have this trend line on their chart. I can do the same for here also. Now that I'm saying this, I can put the trend line here and say, okay, price is now breaking it. Let's see how it responds further. Is it gonna violently dump or wake up like we did and then reject over here, or wake up and then break up over here? So I'm taking what the market gives me and I'm adapting. I'm adapting. I'm not trying to get my trade right. It went not wrong, but it went the opposite of what I thought. I don't like saying wrong because just because a trade goes on the opposite doesn't mean that you are wrong. It just means it didn't happen in the time you expected it. Now, your question to us next is it gonna flip? But I do like this spot. I'm gonna 600 right here, right? I usually associate these with violent drops. This pattern where it trickles down and drops violently, and the fact that it didn't drop violently at this trend line, I'm gonna wait to see how it responds at this price. But for now, we secured 600 on that, right? What am I gonna do next? Same rules. I am down net 300, not 900 anymore. So I can let this do what it wants. I was okay with it being up here, and I didn't have my a short higher to give me some profit for a cushion on the trade. But I'm okay with letting it swing back up there. I have an additional 600 I can use to cushion the position with. So that's an interesting point. 1 minute closure. because if this does break this zone, I'm no longer looking at 1 minute. There's no need. I'll confirm that this uptrend is over, and until we start reversing, which we'll be able to see on higher time frame candles like the 15, which is not a high time frame candle but higher than the one, that will at least come down here. At least come down here to this point. This zone, this previous consolidation zone. We rise and we dump to consolidation zones. We dump and then we stop at consolidation zones, and then we see what the price does next. It's about adapting. I'll repeat that forever. But pretty much, you see how it wicked up, and just at this zone, it starts to trickle down. This is why I like to draw my trend lines. We can't forget what we analyzed previously, saying yesterday it was rising in London, Asia, London, in pre-London, Asia, and then right at the London Open, it was rising, which was here, this zone here, right here. But then we dumped in New York. New York was open, was here. As soon as New York opened, we had some volatility here, then we dumped. So maybe we get the same thing going on in Asia, pre-London, we rise, then late London, New York open, we start dumping, and then we reject off of this support here and we continue driving down where to the bottom of this trend line, and then we are net like 1000 on the day. But yeah, that's until that happens. So for now, we're just waiting. We're just waiting. I'm no longer interested in seeing that 1 minute form. So let's just keep it here for now, and whatever happens, we'll adapt to what comes next. But for now, nothing. Because yesterday I did say I want to get my balance in equity, of course. I want to get my balance up to 23, 24, and then I'm going to start taking 10 lot trades because I don't want to have a cushion. I started this account at 20k 2 weeks, a week and a half ago, 2 weeks, and we're trying to see if we can get 23, 24k first before we start taking bigger trades. Because if I do take a 10 lot trade, my losses will be around 1,500, 2,000 before I am in an invalidation zone. I'm very patient with my trades when I take high volume trades. So let's say if I were to take a buy here, let's say my validation zone is under these candles, I would hedge or take the position out here. So that's 1,800 would spread like 2,000, around 2,000. And I'm fine with that because I would still have 1,000 profit. So I would still have half of this for another trade, and I would still be profiting the account. So people say, hey, don't be emotional when you're trading. I'm human. I have emotions. I feel things. So I'm not just going to eliminate them. I'm going to use them to my advantage, and I'm going to manage them. I'll figure out, hey, why do I feel like this at this price? What usually happens to price when I feel this way? For example, what usually happens to price when I think I should close it? Was it a good idea? Was it because it dumped and then it started continuing to the upside after? And that made me say, oh, it might be the bottom. But you figure out why you think things in a specific price, and you identify what happens when you think those things. You journal them down, you write them down, you start to notice a pattern. Then you can get official data on your intuition. You get intuitive responses to what the market is giving you, and your rate of adaptability to price is much higher than when you initially started. If price were to move against you, you know what to do. You know what you're looking for. It's not just, oh, price is going up until it doesn't. No, I expect price to go up to this range, right? Check the next 30-minute closure in 7 minutes. But so far, I'm loving the 15. The three red candles. I'd love to see a fourth one. I don't like the first one being in this range and wicked up with the body closing on the trend line. I like to see three red candles driving us down because for me that increases the probability of us gaining a fourth candle with high velocity. So moves faster down elevator. Pretty much that's what I like to see. That's what I like to see. But yeah, these positions I cut because I had some complications with the stream. I could not tell if my audio was working, and I was trying to watch the stream from my laptop, but my laptop is not working for some reason. The Wi-Fi is Safari is not can't open a page, but my phone can, so it's just weird. And while I was trying to figure that out, I was not willing to deviate my attention to something else that isn't trading. Trading requires focus, it requires your attention, and you gotta make sure that you are in a position to be able to adapt to what's changing. And if you just miss one slight bit of information, it might cause a ripple effect in your analysis, and then you're actually wrong because you lost focus. Because I also have to identify if we are here. This is the next question I'm asking myself. How do I know we're not here? How do I know we didn't rise, dump down, and keep rising? I don't know. So what I can identify is when price reversed, what did it look like before we got a big momentum candle? We trickled down, and as soon as we broke the two biggest red candles on this 3 minute chart, we started getting more bullish candles with bigger bodies, right? This candle closed up here, which indicated, hey, buyers are just coming in at the close over this range. So what I would look for here is price coming up above one, two, these three candles and closing a really bullish candle like this one here or this one here. This one is also pretty bullish. This is pretty bullish. This one's very bullish. Continuation candle. So that's what I'm trying to identify. So I'm gonna let it do it at once until it's in the zone of these three candles right here. Then I will start saying, okay, this is possibly a reversal. Let's hedge my position here. Take the profit out the hedge here. We'll be in the same position we were before, but we will actually be net profit because of the position we cut over here and the buy we cut over there. But for now, it's let's just see if this trickles down or breaks these three candles. That's why I'm trying to identify if we are in a zone like this. And also, a we had a trend line in confluence with this dump and this buy. So the buyers came in at the peak of this trend line. So we had the one before it, the two, the three, which we took our short in. But it came back down, it broke out, came back down for retest and went back down. Here we don't really have anything. The next zone we have is this up here, which is very close. So I'm trying to see how price responds when it's over here, right? Or if we break above these three candles, pretty much. You want to see if it's making wicks, bottoming wicks. Usually when markets bottom or top, they make these big wicks. Wick and then the second wick and then it starts going down from there when you have longer wicks. It's like a cat with a long tail and you're trying to catch the cat. Well, you'll never catch a cat. If it doesn't want you to catch it, you won't. But yeah, we'll be back. 1 second. Okay, we're back. What happened? Okay, nice. So, trickling down. I'm just sitting down after not looking at the monitor for a minute, and I'm just look how bullish this is. We had one red candle this whole time. You want to go to the 5 minute? We had no red candles until we started reversing. Let it load. There we go. Boom. As soon as we got some red, I was like, hey, next time this wicks up, I'm entering short. That showed me some weakness. We turned red. The 1 minute was turning red. The rate of it increasing to the upside was lowering, telling me the buying pressure was dropping. Then all of a sudden, we get that reversal. We get that break of trend, and that's when I confirmed that hey, I'm moving my stop loss on that trade to break even, right? And now we get to write it down to the midline. Is it halfway? So how many pips is this? 50. So 25. Where's 25? Let me 25 would be around where I close it. This is around 23 from here, maybe. It's lagging a bit. 21, 22, 23. Yeah. So it's around halfway. So that's one of the reasons in confluence with the 1 minute bouncing on this trend line. I didn't like it because I still don't know if we are at this zone, if we're dumping back down to reverse. But based on what price is telling me now, is we want to come into the previous consolidation zone, which is here. So that's what we're looking for now. Because now, what are we? We are in profit. We're in break even profit, basically peanuts, right? But we're in profit. We close the trade over here and we open the initial trade over here. And that's how we managed our risk. I can close this and walk away, but nothing is telling me this is going to reverse. So until I get an indication that this is going to reverse, I'm not managing my risk. I am letting it swing. I'm letting it do what it wants to do. Because for now, nothing. We had our hour closure. Let's see how that closed. I just realized that too. Let's identify what the 1 hour is giving us. No, we had a 30-minute closure, my bad. Beautiful. This is what we want to see. This is exactly what we want to see. We want to see a higher time frame confirmation. So look at this candle here. Look at this candle. Look how big and red it is, man. And it broke out of this trend line. It completely took out this whole candle here. This one. It closed way under it. Halfway under this candle. The next candle continues driving. So where it looks like we want to take up this whole upside liquidity, right? We want to take out all of these orders right here. Where is it going to head after that? I don't know. But until it reaches this price in this consolidation zone, I'm not going to read price, right? For now. So we have to see. It's on the top of this wick, almost at this wick, but we're going to have to see how it responds soon. If we go to our 5 minute, because what I think we should do is remove this, okay? And make it a range. So I will put it like this. Top of this candle, and I'll put this at the body and next to this wick here. And the lower body of this next to this wick. Now we have a range, right? We have more of a range where we came down into the zone, stuck in the zone, and then came up. So I don't want it to just be a little fine line. But yeah, pretty much, pretty much. Would it have been nice to keep this trade from up here? We would have been much more. We close this for 600 profit, right? If we put a sell limit there, change it back to 2 lots, how much would it have been? I love to calculate that. Many traders say don't do that, but no, I want to see my projections for next time. I know I'm not getting emotional about my projections. So here was around 600. Here it would have been 1,000, right? Almost double how much we would have made. So let's just get this out. Let's just see what price is doing here. We reached this consolidation zone. How is price responding? Let's go to our 1 minute. Okay, let's hear our 1 minute. Okay, what is price doing here? We are in this zone. Let's just put a little rectangle from the top of this zone, okay, to the bottom of this consolidation zone. I'll consider this an outlier and confluence of this downtrend. And I will change the color of this to yellow just so we don't confuse it with the other lines. Okay, so what is price doing here? Are we getting aggressive candles to the upside? Are we getting wicks under the candles, which are really long, which means it's picking up the orders and going up? What is happening? What is going on here? These are the questions I'm asking myself. Because I can close now and we'll be good. Today, 677, close for 460, 470, 469. We're good. This is not a trade of my liking, but anything, these little gains add up. It gives you forget the monetary value you're receiving back from these gains, but it puts you into a flow state of, I know what I want to see. I know what I want to identify. You know what? I'm not going to enter short at this trend line because last time I entered short, I waited for a big rise, then I entered short. When everybody was buying, that's when I was selling. Here, everybody was selling that trend line. So what's going to happen? It's more likely to actually go up. Okay, but let's stay focused. You see these candles? When's the last time I got a green candle this big in this downtrend? Here, here, here. So, this is indicative of a reversal. Now, step two is to see if it maintains. What did I do to see if it was maintained before? I found a local trend line, right? But I don't really have anything here. All I have is this box. So, I'm instead of using a diagonal trend line, I'm going to be using this horizontal level from the top of this consolidation zone to the bottom. I'm considering this an outlier once again because it's at the trend line. So I'm trying to see how price responds to this level here. Is it breaking up quickly? Is it wicking down from it and rejecting it? Is it confirming that its sell side liquidity is picking up some sell side liquidity? Is it confirming and aggressively going up? Like you see how this just gapped down and continued? For me, this is now bearish. It's less bullish from here. So now my next question is this going to continue? Is it going to drive up even faster and to fill the gap and just keep going up? These are questions I answer when the price is at this point. At this point, I can't get any information. All I can say is, hey, the candles are bigger, the wicks are bigger, the candles are moving faster. But in the end of the day, it price action only matters to me when it's where my white and yellow line is, right at this zone, right? Because it can go up really aggressively and show me, hey, buyers are coming in, but then just dump. So until it's at that zone, I really don't. I'm not interested in seeing what's happening. We did have a really big downtrend. You know, it would be good to take the position out here or buy two lots to hedge the position. And now the spread between our two positions is so low that I don't care what happens. If it goes down, I close a sell and profit, manage it with another buy. It goes up, I close the buy, manage it with another sell. It's okay, you know. But we have options. We have options. Our first option is to just close. Hey, 470. We made a profit of how much today? 670, right? That's 200. Cool, I'll take 200 on a bad trade. Or not a bad trade. A trade which wasn't an A plus setup, it was a C plus setup. I didn't really like the price action today. I took this short based on. Okay, let's just declutter this. Now that we identify that this zone, we don't need to see it anymore. I took this short here based on this trend line. Let's go to the 5 minute. This trend line here. We came up, rejected, we came up, we closed under it, and I was like, okay, on this candle, it opened here, I entered short. It wasn't that big of a range. That's why I didn't enter. I only entered two lots, in which I usually enter is 10, right? But then I scaled up to six lots. But when I was facing difficulties with the trade and with this live stream, I cut four lots when it came back down. I would have been no problem to hold them, but it's just that would have just meant I would have entered more short there. I would have entered six short there instead of two. But it's the same. It's the same mental game. Nothing really different. Yeah, nothing really interesting here. It's just making those wicks. Is it consolidating where it consolidated before? Yes. Now, where is this consolidation going to take it? Is it going to take it down? Or is it going to take it up? We don't know. We have to see how price responds. My buy is to the downside. Why? Because I'm in a trade. Anybody tells you they're unbiased is wrong. Everybody's biased. No matter what, you're biased. Have an hour closure in 18 minutes. That would be our next influential point in price. Other than breaking this consolidation zone or breaking out of it or under it. But in the end of the day, this is just short term what I'm talking about. Mid term for the rest of the week, maybe I see us coming down here, around here, around here. You know, around this zone here, 2030 to 2025, 2025 to 2030. Yesterday we wanted to fill 2035 to 2040 in between there, and we did get it. Now I'm wanting to fill break this over here and then fill 2025 to 2030. That's pretty much what I'm looking at. But nevertheless, let us get back to our local levels. What is happening to our consolidation zone? Are we breaking under our previous consolidation zone? Are we maintaining it? Are we consolidating? Are we bouncing from it? How aggressive is the price action? To which side is it being more aggressive to? It's being more aggressive to the downside. So identifying a shift of price action to the upside is going to be easier. It's a pattern. Trickle, 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 bang. Trickle, 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 bang. Trickle, 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 bang. Left, right, down. Left, right, down. Left, right, down. Left, right, down. Is it? We'll find out. It's still in the play. But if that down reverses or the left, right reverses, we'll be able to say, hey, something's different here. Something changed. It's going up quicker. It's not going left and right as much. It's not going down as much. It's our job to identify that shift. If we do identify that shift, we can say, hey, price might reverse. Let's adapt and manage our risk. But that's what I'm looking at. Left, right, down. Left, right, down. We want to eventually see maybe two more of those. We'll just close this at break even, or we'll swing it. Or as soon as one thing we can do is as soon as this price heads down here and consolidates, that's the same thing as doing, we can put a buy stop for two lots here. So if it does come back to this zone, we'll just hedge it, right? But if it continues down, great, continues down. That's what we want it to. That's what we want to happen. But also we can turn a negative outcome, price moving against us, into a positive outcome by accepting that the market is going to oscillate and just trade the trend. If it shifts into uptrend, we'll just buy. It's okay. I like to take my money in and get out, but if adapting to the market is what it wants me to do, that's what I'm gonna do. Nothing I can do. I'm gonna sort out this laptop. It's absolutely annoying. Not connecting to Wi-Fi for some reason. Yalla, let's see. Still, just trickling down, trickling down, trickling down. I might just put it at 5 minute hike and a she. 5 minute hike and a she. Yeah. Okay. Okay, شوفوا. Look. Whoa. Now here is our imbalance. Okay, look. I put it high sheet at the wrong time. You really can't visualize this. Absolute bounce. This is a bounce. We came back down to our trend line. And what happened? We bounced. This is a bounce. This is a reversal in what we're talking about. But I can't respond to this. This is too big of a candle. I don't like these candles. I don't like buying into them. Wicked on our trend line. Exactly. So let's see how this continues because we might just have to hedge it and just walk away. Yeah, it's starting to just look like it wants to continue. So what I'm gonna do is I'm gonna wait for this is a 1 minute. I'm gonna wait for a 1 minute closure above the zone. Okay, then I'll hedge it. Would have been nice to hedge it here, but I wanted to come into the zone. It moved too quickly. I did not expect that, to be honest. Did we close above it? I'm very precise with how we close, because this might have been a short squeeze. A short squeeze is when they take price up quickly to hit the stop losses of shorts, you know, and to a very obvious level, it just stops. We're gonna have to see. We're gonna have to see. But yes, this is where I'm looking to hedge if we maintain this. Because even if I just close it, dude, I don't like this price action. I did not expect that. 677, we're down 700. This is break even, but I don't want to be impulsive. I don't want to be impulsive. I don't like this at all. And the best thing for me to do is just to get out or hedge my position because I don't like the price action. I don't like how it's responding. I can read it well, but it's responding to my levels in a way which I'm not used to. It's too aggressive. And what I notice is when things go up really quickly, they come down quicker. If things go down really quickly, they come up quicker to fill it. So I'm not sure if this is a short squeeze. I'm not sure if this is just a bunch of people trying to buy into the market. But what I can do is see if it's gonna close above this level. It's slowing down here, so I'm trying to see where the candles take it next. Okay. All right. Yeah, we're definitely hedging here. Okay. Just how this candle engulfed the rest. This is a buy, right? Yeah, this is a buy. So now we're hedged. It's the first time I've hedged on live. So now we're looking for price to continue up here. Take the money out of this. We're only gonna be down. We're stuck at 848 now. We can't go above, we can't go lower until we close it. But we can net more in the end of the position. So that's pretty much our goal right now. Yeah, right up here. That would have been funny if I bought the top of this rally. It would be really funny. This candle It didn't close above, but it wicked above and engulfed the rest of this range. This didn't close above it, but this is not an ideal bearish pattern for me. For something to go down, just wick up, consolidate, and just come back down like a somebody bought a lot and just now they sold all the positions. So it just doesn't make sense to me. It doesn't make sense for me for this not to at least try to continue. This is showing people that hey, buyers are present, or it's a short squeeze, which still means buyer are present. Buyers are present, but only for the buyer who initially came in to squeeze shorts to leave and take the shorts from the other people. Exchange. But yeah, I'm really expecting this to continue. This move was too bullish. Like when I saw this move down, same way I expected it to continue. You know, the best scenario that we could have taken was we hold the two lot down here and we literally just closed everything here, close it all with that loss and just being I think like 1,000 profit probably or something like that. But yeah, this is us for now. Much better position than when I was up here. It's great. Because even if I do keep this until tomorrow, if I don't like it, I can just close everything and come back. You know, it's only 800 loss. It's not much at all. But if I am right, we can play this beautifully. We can take a rise up here and then take that profit and then reverse down even more. So we have to adapt to what it gives us. I can't just be biased and say, hey, I have a short, I want it to come down. This is what I'm gonna wait for. I'm not gonna do anything until it comes here. Now I have to adapt. Hey, we got a momentum candle. We got an impulse candle. We got a possible inversion exactly on the level I put down. And to the dot, wicks onto it. We made that range, wicks onto it. This one, two, three, four, five, and aggressively moves up. For me, this is bullish. It's bullish. It's too. I wouldn't say. Look, I wouldn't say it's bullish, but it's too much of a move for me not to protect my capital. I have to. Am I okay with being down 850? Yes. Why? I made 677 today. I'm not down that much, right? But what I can do is protect this position and say, hey, if this does continue, where would it continue to? Around here, this zone. Either this consolidation zone, right? Or this consolidation zone. Now we analyze how it is over here, and then if it aggressively moves up, we analyze how it is over here, right? But for now, we'll just keep it wherever because we're gonna be attentive. And if this goes wrong, what happens then? This is an amazing question. Look at this. Go to the 10 minute, just get a better visual of what's going on. We have a 1 hour closure in 4 minutes. We'll just keep that in mind. So if this goes wrong, and when I say wrong, what do I mean? I mean that I entered my hedge, my buy, so I'm not losing any more money now, right? And I enter my buy and this starts going in my favor, down, as I initially expected. Now my sell is making less money, making money, and my buy is losing me money. So I'm gonna be stuck at this. So if it does come down, I'll take this down to my initial level, right? Which is here. See where this line is? Well, I'll just use this line. Hold up. I'll take it down here. Take profit on that. Okay. And once I do take profit on this, I'll look for a bounce. The same thing we saw here. If we see something like that, I'll take another buy over here. And then I only have to meet it halfway to be break even on that trade. Where is halfway? Halfway is around here. What is here? The top of our trend line. So it's just all in confluence together. Even if it goes wrong, this can come down to this trend line. We're going to see if buyers respect that trend line. If we get a bounce, we will close our sell for profit. We will take another buy. That will move our average entry for a buy
down. It will move it here. What's here? The trend line. So that's in confluence with our break even point. The trend line is in confluence with our break even point. So it's a perfect way to manage risk. If this goes up, great. I protect my capital. I take out 200 more, 300 more, 400 more, and could take another short. Or I can wait for this to come back down, and because I have more profit, I can close it at break even if things get ugly. But for now, I can say no. I can. I don't like the price action. It's not something I would trade heavily. I'm only trading it two lots. That's why it's not something that I am looking at and saying, "Wow, this is I have to trade this." It's just like, hey, the market can give me what I wanted to give me. It's possible. It's very possible. So that's what I'm. It's a position to manage risk. If this was a higher size trade, I guarantee you I would have closed it around this point. I guarantee you. But we'll get there. And oh snap, error code out of memory. Habibi, remember. Pretty much. See how price is slowing down around here. Let's just go to the 1 minute. Slowing down around here. Could be a little top where it goes, comes down, and then we have to go with what I just explained. Or it could be consolidating and we take a measurement from here, grab a trend line, take this to where it consolidated, put it to where if it would possibly break out to, it would go around here, right? This is where I would look to take it out, which is just near our consolidation zone. I'll take it to where there's more candles, which is this zone. So around here, if it does go up, that's where we'll expect to take it out. But in the case it goes down, we'll just stick with the scenario I just gave. But even if it does go down, I can say here, you know what, I'm gonna close the buy, close it at a loss. How much loss? 100, 115 loss, and just take this one down. There's a lot of things we can do. We just have to wait for price action to tell us what's gonna happen. Was this a short squeeze or is this a impulse continuation? I'm willing to say that this was a short squeeze now that I'm looking at how price is reacting to the level. Looks like it was very much so a short squeeze. If this was really bullish, my experience tells me is that it's just gonna trickle up. It's not gonna trickle down. It's all gonna go up and then start trickling down. It will main. You see where it happened here? How it was going up. This would be maintained on this side. This would just keep trickling up. Then we would have another one of these, maybe half the size. But because we're not trickling up, my intuition is telling me now that this is going to go down at least here. But I don't know if I'm right unless we break under the zone. You see how these wicks, this consolidation zone, it's consolidating in the same space. Is it doing the same thing it did here, but to the opposite direction? We go down, consolidate, go down more. We go down, consolidate here, or we go down, we consolidate here, go up, consolidate, go up, consolidate, go up. Shift in trend. I'm not a genie. I can't. I don't think people should predict the market, but they should enter a position and adapt to what they have and what they know. So pretty much. But also thinking if I wasn't a buy from here, I would have taken it out here. I'll put it like a stop loss under this region, you know, under this zone. But still, we'll see. This move was too big. It was too big for me not to act on. It's like a news candle. Did we get any news or something? Did something come out? Nothing. Nothing at all. got a 1 hour closure. That's probably what happened. Is we do usually always get volatility near the end of 1 hour closures, and we closed 3 minutes ago, and that's kind of when this happened, if I'm not wrong. Oh yeah, so this can definitely just keep going down here, but we'll have to see now. It's not breaking that little range. This little range, it's not breaking it, so we'll have to see. Bring the buyers in, and then they come back in over here. Bring the buyers in, they all get stop out, goes back down. There's many options. There's many options. Yeah, but this once again, this move was just too bullish not to act upon it. Take profit on around here. Yeah, around here. Take a look at the hour closure again. Yeah, very bearish. Very bearish. Now we're looking for this candle to take this wick liquidity, go back down, pick up liquidity for to where we bounced on before. When things go up quickly, they go down quicker. Always keep that in the back of your mind.
Next thing I'm looking at now is if this is a head and shoulders, because if it is, then we might just cut the buy, right? See this left shoulder, big head. Oops, we messed our trend line up. I don't know how that was. I'll just delete it. Big head, and we're making our right shoulder here. So might be. This was a bit impulsive now that I'm looking at it. That was definitely a short squeeze for sure. So that means what's coming is gonna be much, much bigger. So if it doesn't bounce from here again, we can just cut the buy. No, it's today. We need today, not current week. Absolutely. So 677, cut the buy 460. Because now we're noticing the head and shoulders. Do I want to play that scenario or we go down and bounce? You know what? It's possible. It's possible. It's very possible. It is possible. I am bearish on gold, but like I said in the beginning, just zoom out. Zoom out and just look. We can easily come back down here and just drive back up. We still didn't test this trend line, which I expect us to get even closer to. So that's how we'll manage the buy. I'm gonna leave this. I'm gonna leave this. Maybe we open the stream and it's still up tomorrow, but I never leave positions open. Not never, but rarely. On gold. On the indices, oh yeah, you'll see me just swing positions. I have no problem doing that, but I am new to trading gold and I am just figuring its price action out. And for now, this head and shoulder is a potential. There's potential in it. How much would that have been up here? Take it down the same place. Yeah, that would have been like 4 if we close it up here. 3.2 if we met it back down here. 7. Yeah, yeah. We'll find those trades eventually. There's no rush, to be honest. There's no rush at all. I'm just really trying to build this cushion. I'm sticking to my plan. Take your balance up to 23, 24, liquid, and just go hard. Just trade how I always trade on gold. But on gold. Let's see, the 1 minute might take another buy over here, depending on what's going on. Because this head and shoulders is invalidated if we head above here. Well, this was a clear short squeeze now that I'm looking at it. Bang. Nah, this was not a good idea. Now that I'm looking at it. The buy is in the higher lows in this cell. Oops. That was here. Yeah. But you know what? Because I think this is gonna dump hard, it's gonna end up recovering. So if we take this down to here, okay, our buy is gonna be in a 2,600 loss, and we'll have a 2,000 positive here on this short, considering we also made 2,600. So it'll be break even, around break even then. It's still around break even now, but we will close this short around this price, around this range in the middle. And if it wicks up,
we can just close it at any time it starts to look weak again. Because of this 1 hour close and because of this local head and shoulders, I'm expecting this now to drive down aggressively. I can either just close this, but do I think gold is just gonna keep driving down from here? No, I think it's gonna bounce eventually, and we can profit off of it. Even though it's not the number one outcome, we can turn it into a positive. I don't know if we flip bullish here. Maybe everything I'm saying now is wrong, but just based on my experience, this is what's gonna happen. We shorted at the bottom and we bought the top. It sure looks horrible if you look at it that way, but nah, nah, nah. If you look at everything in between, it's all good. If you stick to your plan, it's all good. Just don't be erratic. Remember, we're only at 200 something loss. We made 677 today. 824 minus 677. That's 350. We're only at a 350 loss. What am I talking about? No, we made 600. No, 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 no. We made 677 minus 833. That's a 156 loss. We're only down $150. It's okay. I'm willing to keep this open. Let it stay open. It's fine. Because no matter what happens, I won't make or I won't lose. But when I manage this position and take the profits from it, I can use this negative to turn into a positive. So this goes down to where I expect it to go to. I take 1,600 out, and because it drove down so much, I'm expecting a relief. I put a relief, and what do? I just keep putting my stop loss higher, higher, trailing it with the market. Keep moving it higher, keep moving it higher. If it wicks it, it wicks it. I'll end up making a net profit. If it doesn't, we get to keep this whole 1,600 on top of what we have. So that will be like 2,400 around, you know? And then we close the buy. Or we just take the buy back up even more and do the same thing we did with the sell. And then hedge a sell. So this is how I trade. I am not a fan of these YouTube traders who risk 2% and make 1% and keep your losses a minimum. Habibi, I'm not Warren Buffett. I didn't watch a video to learn a trading strategy. I'm looking at some now, trying to see what other people do. But I don't do that. I never did that. I take what I know and I take my experience and I roll with it. I go with it. I just use what I know. I didn't even realize traders were a thing. I thought it was something only like the exquisite did. Now you have something called prop firms where you pay to get fake money in a demo account, and if you're successful, they give you the actual. I understand the business model, but they rely on you to lose for them to make money. Okay, look how we're responding to this here. Wick, 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 wick. Now we're trying to see if this breaks out here. Are we gonna get another one of these moves? Or are we gonna get another one like this, where we go up and trickle down? Well, based on how we're sitting on the trend line, how the candle is breaking above the previous candles, how the candle just closed above these candles, how it's in the previous consolidation zone where it went up before, it's telling me, hey, there's some strength. There's some strength for this to reverse. So this buy might have been a great idea. So what I can do here is the same thing I did up there. Is put another buy with a very tight stop loss. But I don't want to, like, here we put a sell over here with a stop loss, just not, that was like, would lose $100 if it was wrong. Nothing, peanuts. But let's say if we put a buy here, it's probably going to be in 10 lots. We don't want that. And, 366, that will be around $60, 70. With the spread, it'll be like 100. And when I say spread, I always put the worst case scenario of worst case spread. Like right now it's 1.6, 1.4, it goes to 1. I'm considering like 2.4. Always put my stops respecting spreads. I understand. I have to pay to trade. It's a service. A broker brings a place for buyer and sellers to meet. That's their business model. And in the middle, it's like me going to put a stall down and I'm going to the market. The people put the stalls down pay to have their stall in the market. And the buyers come in and exchange money for the goods. So the market always wins. The broker always wins. They're just a medium of exchange, an intermediary between two entities. So they're gonna make money. Now price came up, came down, wicked onto the trend line, continued. This for me, I'm certain this is gonna drive up at least here, 6.6 pips. I'm very certain. We're gonna get a big candle now up to the upside. I am so sure about it. How we made one, two, three, four green candles, and on this one, where we're not really moving, we just wick on this trend line. For me, my intuition is telling me this is gonna bounce hard. This is gonna bounce really hard. You know what? I think we'll actually even possibly head back up here and we can see what we do with this buy. Because maybe it wasn't so good. Like, look, how much was I at a loss? 150. Yeah, 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 yeah. Yeah, 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 yeah. We should have just exited this short here with no hedge. But this move was aggressive. But I think we can get it back up there, and even if it goes wrong, I'll be fine. I don't mind. I don't mind. I'll be in the same position as I was before. Yeah, but there's this candle we're talking about. It's much larger relative to the previous three candles, especially in terms of the body, as we just saw. So this is indicating to traders that hey, there are buyers present. They're buying a breakout of this consolidation zone. Now it's up to the rest of the traders to maintain that move. Is there enough volume to maintain the move and keep it going? That's what we have to see right now. But just based on how price action is just jumping around here, I say we trickle around, maybe go down a little until we head back up to this consolidation zone where this line is. But yeah, I'm just sitting waiting for now. Nothing I can do at all. Because right now there's no opportunity to not make mistakes, but we want to make the best decisions possible so we can either exit this buy or make profit on the buy and enter another short and close the net short or break even on those two positions and be in profit on the other 600 we made. There's a lot of things. But yeah, there's that impulse candle. Let's see if it maintains. No, we have a closure in 5 seconds, a 5 minute closure in a minute. So we had a 1 minute closure above this zone. Now we have to see if price corresponds with a continuation based on the recent momentum candle we just got. Is this a squeeze? Is this taking out buyers stop losses who just entered? exchanging the orders to other hands, to other people, and then it continues driving up. Is it a rejection of the consolidation zone and we continue driving down? Based on how quickly the candle went down, I'm saying it was a little long squeeze, a tiny long squeeze, pick up some liquidity down at the, since there were many buyers at that momentum candle, and then just go back up. That's what my experience tells me. But we'll be back.
Okay, price action is getting pretty boring right now. I was watching it from my laptop. I got it to work. Now, see, it came down, came up, came down. The bodies of this candle are near these bodies. We're still. I expected to consolidate around the next consolidation zone, which was here, and that's what we're doing. We had a big up, came back down even bigger, more, and now we came back up here. We're consolidating. We came down. We came back up. We're consolidating. So price for me is telling me it wants to sit within this range until we get a break in either direction, right? So here until we break this in confluence with this trend line, that rectangle in confluence with this trend line, we can take the short down here. If it looks weak, we'll take it down to here. Um, but yeah, we have options, and if this maintains its strength, we can get back up and close this. But I'm very comfortable now. I have no problem holding either or. It would have been a better option to not hedge, but because the 5 minute closed, I'm not sure if I entered on this candle or this candle, but whatever. I had the information that the 5 minute closed above this range. So I was like, okay, that's bullish for me for now. It's a reversal in trend. And it's in confluence with us going up here, up here, up here, and then we go up here. That's what I was thinking. So I'm very comfortable with where we are. If we go down, it's fine. At the end of the day, even if I wait until tomorrow and I close both of these, we're still only in 150 loss. We made 677, add 100 onto that, 777, add 50 around, so we got 830 around there. So even if I close it whenever, even if it's here, it will always be a 150 loss. And we can trade between the lines. We can find, like, let's say if we bought a little buy over here, let's say it was 2 lots or 5 lots, make 800 on that, 600 on that, 400, take profit, close all of these, we're net 300. There's a lot of ways we can manage this risk. You know, I always tell this to people, try to figure out why you feel a certain way when price is doing a specific thing. And how does price respond when I feel a certain way? So now I took a mental note and I wrote it down saying, yeah, price came up here, 5 minute close, I got everything I wanted to see. So I hedged. What happened after I hedged? It went down. What would I say differently now? Okay, wait for three 5 minute candles. If three 5 minute candles close, you can confirm you'll move up. Right? It's more of a confirmation. It's more in confluence with my strategy. No matter what, every day, every time you leave the trading floor, you're going to take something with you. You're going to learn something. Now, what I'm looking for here is a little relief. This was a big dump, as this was a big rise, but we took all the liquidity. So this started rising from here. We took all that liquidity. Now, am I going to expect price to continue? No, I'm expecting price to continue on its wave. This is a wave because if it is in an uptrend, it'll go up and down, then up, then down, then up and down, then up and down, then up even higher, then down. It's a wave. It's a wave, and you have to understand that. So now, what I'm waiting for, which is one reason I'm comfortable, is I'm hedged. We have these 15-minute wicks. One, two. If this third wick stays here and the next candle opens green or this candle closes green, it'll be good for us in the short term. We can take our buy up to this zone, close it. Maybe in New York, sell volume comes in. But pretty much that's what we're looking at right now. But I'll keep the live going until I'm done with the session, which is what I'll always do. I will most likely never close a live session if I'm not done with the trade or not done explaining what I'm gonna do, and then we continue in the next day. Or I'll put my stop losses and take profits, and then we'll go over it in the next day. But I want to maintain full transparency and full credibility, showing you guys this is exactly what I do, but I do it with more size. Now I'm doing it with less size, 20k, right? What I usually trade is 50, 60, 70, around there. Now I'm doing it with smaller size, so what would be my 10 lots is 15 lots would be now like 5 to 2 to 5, and then maybe 8 lots, sometimes 10 lots. But yeah, pretty much same thoughts. I want to document this for anybody who's gonna want to watch in the future
to see if does this guy really trade, because I do respect people who live stream their trades, especially if they're trying to teach. I'm not gonna expect you to listen if I don't show you I know how to do something. I said this yesterday, but I'm big on skateboarding. If somebody was a skateboarder and they're trying to tell me how to skate and there's no videos of them skating, they've never stepped in a skateboard in front of me, why would I listen to them? That's 95% of what I see on YouTube. All these people teaching how to trade, but Habibi, there's no video of you trading. There is no live, there is no login to your broker, there is no sharing trades with people. And even if you do share the trades, you pick the ones that won. Bro, show me you losing money. I want to see how you respond when you lose. What do you do? That alone will tell me if you are a serious trader or not. When things go wrong, how do you respond? What do you do after? Do you hide and stop trading? Do you accept that it's an individual event and a statistical anomaly? Do you accept that this is part of the game? What do you do? How do you respond? As soon as I take a look at a person lose, I'm very excited to see how they respond, because that tells me if they're really experienced and really about it. Really, I'm really about it. I love what I do, right? I've been doing this for a long time. It took me so long to learn how to be profitable. I started taking trading seriously around crypto. Somebody came to me, introduced me to crypto. I utilized my knowledge, everything I knew about trading indices and oil, which is what I usually traded before. I utilized that in crypto and I realized, what am I doing, man? Why am I trading this lame index? Let me trade some Bitcoin. I was heavy in oil because oil went negative, and that's when I started in confluence with somebody introducing me to crypto. That was in confluence of me starting to take trading seriously. Because, man, if you just bought anything, oil, a stock, a commodity, a futures contract, whatever it was, if it was oil, you would have made money no matter what during the pandemic. Oil went negative. As soon as I saw that, I would put my stop losses and I would look at the orders, be like, it's not gonna go negative again, no way. So I just put my orders in. The spreads were horrible, but it eventually recovered. Moved money into crypto, moved money out of crypto, made so much money in crypto and lost it all, leverage trading it, and that's how it all started from me. That was the first big loss I've ever taken was with crypto, and it was actually wonderful. I'm so glad it happened. It taught me so much. It brought me to where I am now, and it's funny to look back at it. But yeah, pretty much stick to the plan. See, break out, go down, retest, go up, see if you're gonna get some sort of relief around this price. Maybe close this here. Maybe it goes up and becomes weak, and we're saying, hey, this move isn't actually what it looks like it's gonna be. Doesn't seem like it's gonna be that big. So what do? Get out of the order. Drink a pint of Guinness. No, no, but I don't drink. Just that was a joke. That was a joke. You know what's funny? Is that there's two viewers on here, and they're both me. This is gonna be funny. I'm gonna look back at this in the future. Whoever is listening to me in the future is gonna look back at this and be like, damn, man. But yeah, okay. Wick 1, Wick 2, Wick 3, right on our trend line. Let's try not to move this down. No, let's correct it. It was right there. Let's fine tune it just in case. Always fine tune your levels. Remember, I moved it by accident and I moved it back. I just want to make sure it's on there. Tick 4. Alright, there we go. Let's do it like this. Let's do it like this. I like this. Make it more of a zone instead of a line. Don't want to rely on a line unless it's a horizontal level. I like those horizontal levels. But yeah, this is looking very bullish so far. I am now bullish. I'm not saying I am less bearish. I am expecting this to go up now. This is a clear reversal to me. Now, if you go on the 1 minute to try and confirm that, this is what a reversal pattern looks like. So, you go down, you come back up, right? Ignore this. You come back up and you go down lower than you went before. You recover beautifully. Three red candles, four green candles, sorry. One, I'm not counting this one. This was a wick. It made a big bottom wick here, like you made a big one here. picked up liquidity, went up. Then you had one, two, three, four green candles. This is a reversal pattern, this specific key moment. So the first thing is you go down. The second thing is you go up. You break the high that you came down from, which is here, right? You want to go back down. You go up again. This is the key moment right here. When you go down, if you see any strength in candles, any wicks, this is where you enter with an invalidation zone under here. This is a reversal pattern. This is something I usually trade. Because I was already in a trade, I'm less inclined to trade it. That's something called opportunity cost. I'm less inclined to enter a trade because I'm already in a trade managing it. Now, I'm not here to talk about whether that's a right decision or wrong decision. That's just the reality of my situation right now. So, this is a reversal pattern. It would be lovely to catch this. Stop loss under here. Around here, you manage your trade. And how far do you take it? You take it to take up the whole. What my take profit is on my this order. Yep. You take up the whole all the consolidation zones. So one, two, three. As soon as you reach the top consolidation zone, that's where you take it out. So that's losing 1,800 to make 3,000. That's exactly 1 to 2 or 2 to 1, right? Exactly what you want to see. That's beautiful risk to reward. And keep in mind, I wouldn't close it there. Why? Because the market is gonna oscillate. It's gonna move. It will turn. It will wave up and down, and there's nothing you can do about it. But as soon as this goes into profit, in terms of closing above a local high, which is this, stop loss always moves to break even, and you leave the trade. You can close the trade. You can do what you want. But most important is stop loss is to break even. Now, your edge as a trader is going to determine what you do with the trade here. You're going to close it up here. You're going to close it as soon as it's in profit. You're going to put stop loss to break even and just let it do what it wants? Are you going to trail your stop loss and keep it climbing with the price? So many ways you can manage your risk. Are you going to enter a hedge and protect that position, take it down, close the hedge? Whatever you do, whatever. There are so many ways you can manage your risk other than, oh, I was wrong. Let me close the trade. For me, trading is not and should not be as binary as that. It should be more complex as what are the ways I can manage my risk? Let me write them down and let me take action. It's not always what was wrong. If I catch 10 trades and my risk to reward remains at 1 to 3, I'll make back the money from my losses. Habibi, what's this? What's this? You're playing poker? You're playing Counter Strike, bro? You want a high win rate? No, we're here to make money. Understand what you're getting involved in. It's a market, it's gonna oscillate. Now, how do you adapt to that? If you wanna have your own little niche within the whole wave of saying, hey, I'm only gonna trade this range and put a stop loss, do it. Like I put a stop loss here. I had a stop loss right above the zone. I was like, hey, if I lose, I'm gonna try to get a top wick entry. A wick up, enter, and I put my stop loss. And I removed it because it was a mental stop loss, right? And just indicate to myself and to you guys how much I would lose or where I would take it out. But yeah, I wouldn't just enter this trade here. Even though I knew this is completely reversing, I'm not gonna close it. How do I know something's just gonna come down later? But what I do know is price is gonna retrace to my entry, if not very close to. Very close to. So that's what we're dealing with right now. We do we have a 15 close? We have a 15 close, an hour close, and a 30 close. So let's analyze that. Our 15-minute close super bullish. This is wonderful. I love this a lot. The two wicks, واحد اثنين, 1 2, have this little wick. You're making like a little U to drive up. 30-minute close, the 15-minute close above this range here before, above the previous bodies, including that. 30-minute, beautiful. Same concept. We have one long wick, two long wick, three long wick. What is this doing? It's picking up liquidity. What is liquidity? Places where the orders are in the market. There's more buy orders around this zone because it's coming down and it's ripping back up. It's coming down and it's ripping back up. The bodies are closing around the same spot, opening around the same spot, and closing around the same spot. This candle open here, closed here. This candle open here and closed here. So it's within this range. The buyers and sellers are interacting here, but the sellers aren't entering here. They're taking profits on their shorts or they're buying. Nevertheless, both is buying. Now, if we go to the 1 hour, how did that look? Same exact concept. What do we have here? Say it with me. Wick, wick. We don't have a wick here. So what do we expect this to do? Continue and continue. Because if this were to continue on the 15 minute, we can't afford it to go down and make another wick. That's too weak. So what do we expect the 1 hour to do? Is to not make a wick and do what? Give us something called an impulse candle. Something like this. Relative to the size of all the other candles in the uptrend previously, this is much bigger, right? We want to see an impulse candle, maybe get a double top, and then we start going down. Impulse candle, breakout, we continue higher. Impulse candle, halfway, but whatever. We want to see an impulse candle here to confirm that everything we are saying now is true. Because if it is true, we are now in a flow state. We have identified and we're synchronized symbiotically kind of with the market. We understand the buyers and sellers in this session right now at this price, at this range from here to here. Right, we've been streaming I think from here. Yeah. From here, right here. So we understand how the price is oscillating. When it comes down to this zone, it wants to go up. It comes back down, it wants to go up. When it makes these long wicks, it wants to go up. When it makes these big wicks from the upside, it wants to go down. So that's what we're thinking. If this continues to move up, that means we are right. And the next thing we're gonna do is do the exact same thing we've been doing the whole time, is we expect the market to move to the next consolidation zone. Where is that? Right here. It might not look like it, but if you go to the 15-minute consolidation zone, 1 hour, you can see right here, one, two, three, four, five candles at this consolidation zone. If we move backwards a little bit more, we'll see something. But eventually, what we know is there is a consolidation zone right here. And we want to see is a move up in the market. So that's our analysis for now. Let's just wait. Now is the waiting game. We explained it, we engraved it, and now we have to give it time to play out. Because without time, the markets don't move, man. Okay, one thing I'll pay attention to is this 1 minute right here. How is price responding? And second, is let's draw a trend line from here to here and see if there's anything to the more to the left of it. So like this, right? Or let's draw it exactly to the head right there. So one, two, three. Let's drag this down. Let's see. Is this gonna see same thing right down here? So wick. So we can make this one a range, more of a range rather than just a single wick. So we have these lines right here. But this is in confluence with this trend line we had initially, so there's no need to put it down. We know, and we can visualize bounce, go down, bounce, bounce, so low, low. But now you broke the structure where you go low, high, lower. So you go low, high, lower low, high, lower low. Now you broke the structure. You broke this high, you're testing this high. Now you want to break this high and test this high. Then you want to break this high and test this high. You just want to follow the market. You don't want to predict it. You want to follow it. Pretty much. But yeah, based on our 15-minute closure, 1 hour closure, I'll definitely just keep my eyes on those. I'm gonna go continue studying my economics so we can kick ass in the future and develop our strategy, work harder, make more money, make other people more money. Pull something like Shopify. I think I don't know the numbers, but I think it's around customers on Shopify. Not people who use Shopify, who have their shops on Shopify, have sold around 400 billion worth of products, and Shopify themselves made around 3 billion, 4 billion. So the fact that they're helping other people make a lot of money, they themselves make a lot of money. That's the approach I want to take with my trading. I do eventually want to have a fund when I'm older, a hedge fund, investment fund, and I do want to make people money. The world is getting harder to understand in terms of monetary policy, what's going on in terms of interest rates, how they influence the world. People are not able to keep up with this information, and it's very speculative and spontaneous. You get this spontaneous level of change. So, what do I want to do? I want to offer them an opportunity to have this information explained to them and show them how to profit off of this information. And that's what I want to do for people. Make them money, especially the people who don't know how to do it. Because, all this basic information, oh, buy the S&P, you'll get an average of 14 or 12 or whatever figure it is percent per year. People don't even know that, right? They don't know that. That's if you bought the S&P. That was the average increase per year if you take from when it started. But once you start changing when it started and you start taking it from 2012 or 2002, what is the percentage gain per year? It really fluctuates, but pretty much that's what I want to do for people. I want to let them know. I want to show them that investing shouldn't be hard. Should be, what companies do you like? What products do you use in your life? Do you like Apple? Do you like Google? Do you feel like Google will be around when you have kids? What would it take for Google to completely disappear? And you invest in them and you take people's money and invest it for them and you show them and you ask them these questions. They're like, oh yeah, right, yeah, I don't think Google's going anywhere. Or I don't think Apple's going anywhere. Maybe a bigger, more speculative bet, but I think Tesla's going to be one of the biggest companies. I'm not saying this, but maybe this is what somebody would say, that I think Tesla's going to be one of the biggest companies in the world. Maybe it becomes bigger than Aramco. Maybe it becomes bigger than Apple. But you let them, you give them the availability to ask those types of questions because they're aware that this knowledge is now available. Hey, it's as simple as looking around me, what products do I use, and just buying the stock instead of buying the product. Yeah, that's it. That's what Warren Buffett did. Great, do it. Warren Buffett's a great guy. He's amazing. I learned a lot of trading psychology from him. He does not care. He lives a simple life. Who I might not agree with how he uses his money because he doesn't use it at all. But you do what you want to do, right? And he does what he does great. اقسما بالله كني مجنون قاعد اكلم نفسي بس احس ان there's 100 people in front of me. والله كني مجنون مجنون مجنون. كني قاعد اكلم ربعي ولا شراكه وسووا كذي وانفستمنت. And then at the end I'm just talking to myself. Two viewers. الايباد واللابتوب. oh man. Oh man, والله وناسة وناسة وناسة. But look, this is note to myself. We're gonna keep this going. I would be honest. If I came across a live streamer who was making كم كم شنو 600 عندي ايش تبي يعني شنو مسوي فلافل يعني شنو بتسلك شنو بتشتري يعني كرسي جديد change one of the brakes in your car تكفى شنو بتسوي يعني current week 1000 يا حلو 1000 شو اسوي ب1000 يعني شو راح يغير حياتي لا ما راح يغير حياتي بس it's nice. So this is note to myself, and we keep this going. We stay consistent. This account grows, our strategy grows. We end up making more money. I reach the point where I'm like, okay, this is enough of a price cushion. Let me increase my size to how I usually would trade. وكذي يعني. More people will end up watching. I'll take shorts from my live stream, put them out. I'll take the best moments that I think are the best moments, or moments where I explain before I enter the trade, after I'm a trade, or when I hedge, when I'm exiting a trade, whatever it is, you know? But I'm for certain that this will grow. Everything's a problem if you don't know where you're going. That's anytime I run into a little problem. I ask myself, it's only a problem if you don't know where you're going. You don't get what you want, but you get what you deserve, so go work for it. And that's been what I've been striving for my whole life, especially recently. Skateboarding has taught me a lot. So hard. Put anybody on a skateboard who's never skated before, I guarantee you they'll fall. They don't know how to balance on it. Just standing on it is hard. Imagine moving with it, flipping it under your feet over stairs, catching it with your feet and landing back on it. Now, the amount of skill between just starting skating and being a casual, really good skater, like properly tray flipping four stairs, it's a huge gap in between. That's the same thing with trading, man. You're gonna fall, you're gonna fail. You have to be persistent. Skateboarding is so boring when you just start out. What can you do? Just move straight and turn? But then you see the guy who is tray flipping over a 10 stair, and you're like, no way that's possible. And you just keep going, you keep going, you keep going. I inspire myself. I end up taking these trades where I make a lot of money and I reach my whole take profit and went exactly as planned. And I look back at those recorded moments. I record my trades, I journal my trades, and I say, wow, that's why live streaming is a better form of journaling. Plus, I get to teach people, so I get to leverage it and leverage my live stream to teach people and help myself too. So I get a moment to say, okay, this is what I'm doing. Okay, okay, price is breaking here. But yeah, between skateboarding, you gotta keep going. It's boring in the beginning, but once you get there, it's super fun. And you use other people as examples of where you want to be, in which I reflect to where what I want to do in terms of goals I've achieved before. Yeah, it's very boring in the beginning, but once you get to that flow state and understanding what the market is, oh man, it's amazing. It's the best thing you could do for yourself. But I can see why most traders don't make it. This stuff's hard, man. This stuff's hard. When you're losing money and you need to make money, you need to make money. You have to. This is your only thing. And you also in turn learn how to manage your emotions. Man, that's hard. That's really hard, dude. It's not easy. It takes a lot of practice to get used to that. Okay. Now what I'm thinking is this is rejecting off of here one, two, three times. Do we cut this position, the buy, and ride the sell down, 200 minus, ride it down to another 300 minus 500, and then we only make like 200 on this? Or do we just leave it, and if we even close it tomorrow, just for example, if we do hold it, we only lose 150. Who cares? Shino 150, tick 4. But tomorrow's a new day. Like, let's be honest, this London session price action is boring. It's boring. That's so boring. This short was great. This short was beautiful. It was fun. Yesterday, man, we started like here, this point. We went up, then down in New York, but nothing really happened. We just stuck in this range where it was here. Here. Man, Shina, what's this, dude? We want to see some, like, rises like here, bang, and then we go up this much, ooh, like here. Then you go, tick, 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 tick. Like, this is awesome. This was awesome. This was nice. That was the only move. That was it. And what were we doing? We were shorting. Yeah, but pretty much, I'm not liking this price action. It's boring. So even if I do close this at a 150 loss, who cares? I know if we get a good day where we got some serious volume, some like China gold buying volume, we'll catch those trades. I can identify when it will move with precision at those points. I am very good at doing that. So same way I can say the probability of it going down from here is higher because we rejected twice, right? The probability of going up here higher because we bounced on it twice. So it's just the same rules over and over and over again until it's broken and we shift. But yeah, when we do get a good volume day, the premise of what I'm trying to say is if we do get a good volume day, I can just close all my positions now and then I'll trade on a good volume day and we'll just make even more money. It's only 100 loss, who cares? But for now, I'm just gonna sit and wait because I do believe that we're gonna go up higher, and I can manage this buy. And then in New York, before I go sleep, see what's gonna happen. So pretty much, pretty much. Because what I want to do is I don't want to end up. I've been streaming this for, let's see how long, like 3 hours now. 3 hours, 15 minutes. I don't want to be streaming for this long, man. I want to make my trades, come in, get out, move on, start studying for my economics classes. I'm loving what I study. It's absolutely beautiful. I have amazing professors. So I want to put my time into it. That's why I dedicated London session and I moved my shifted my time away from New York session, in which I usually trade S&P and the Nasdaq. So let's just see how the S&P is doing. Yeah, still nothing. Have a swing short from here. Head and shoulders. It's still going because I'm expecting this to be same type of top as we had here, where we got a little ugly head and shoulders and we dumped heavy and then started rallying again. But yeah, now my premise and my goal for my goal for S&P, uh, retrace. Listen, I think we're in a bubble. I don't think. I'm very sure we're in a bubble. But if we're not, it will be the best bet I've ever lost. Cool. I think we're coming down to 4,000. This consolidation zone here. At most, maybe 4,560 at this high over here. But between this range, right? We'll come down into this range. So it's more likely here. There's not big of a gap in between them, but there is a decent gap. That's like 460, 468 to 458. Yeah, so it's like yeah, it's a decent gap. Well, we'll come back down here and then shift to make a new all-time high, and then bam, bam, bam. My long-term target on S&P. Some people will be terrified of that, but I'm just basing this purely on technical analysis. So we'll go back up to 4,000, not back up, but we'll go up there, 5,400, and we'll end up eventually, I'm talking 2,900. Wick, the, this is the COVID before the crash. Wick under it here, 2,800, 2,900. Absolutely insane. And this is what I'm looking to catch. That's gonna be my big short. I'm gonna stack up my positions from here. But I'm waiting for it to come down. I already have shorts from here, here. Waiting for it to come down. I'll take profits on those shorts around this range. Enter buys actually. Maybe just let the price swing. I'll see how price is. And wait for a price to make a new all-time high. Suck all the have a suckers rally. And then from there just take out all this liquidity and just go down 2,900. Absolutely sounds crazy, but we'll have to wait and see. Nobody believed Michael Burry, you know? Mark Baum as he was, as the other guy was in the movie. I don't know, but I'm sure he was a fictional character. But yeah, that's the S&P. Let's go back to. See how it's respecting? We got a third wick here, but at the same time, it's respecting the zone. It's not like it's dumping, rejecting dumping. It's rejecting coming back to the zone. So at what point are we gonna reject? Are we gonna test the trend line and not reject? What's gonna happen then? What's gonna happen to price? Is price gonna move quicker? Is it gonna reject on the fifth time? I noticed the market likes to work in 5 and 3s, so if it doesn't break out on the third test, it will break out more likely on the fifth test. That's just what I notice. So this would be our third test, considering the candle didn't close. Look at our spread becoming wider as we approach the range, indicating volatility is incoming. People are closing the positions. There's less transactions between people, meaning you have to pay a larger spread. The candle actually closed above. We got a breakout. Hopefully, we can maintain this breakout and we can continue. Okay. We have a 30-minute close soon. We'll check on that. But for now, same thing with our 15-minute. I'm looking for a drive up to. Yeah, we'll see. around here, around this price, this range. We'll see. But yeah, I'm just gonna wait and walk away and set some alerts. And when price reaches around here, we'll see how we'll respond based on how price is. But that's our target for now.
Okay, just came back from a little study. You see this inverse head? I noticed on my laptop. Left head, right shoulder. We break out up here. We had the same thing kind of here. Left, middle, right shoulder, broke out, retest. Maybe we can take a. We already have this, but we take this by up here, wherever. It comes down and fails. It comes down, retest, we buy again. But what I'm pointing out is that there is currently buy volume, right? There's definitely some buying pressure here. Let's see if this continues. That's based on the 30-minute. Just closing body to body. They're standing all protecting the zone. Doesn't want to go under the bodies, doesn't want to go more than 10 pips from each other. 12, 10. Yeah. How much were we at yesterday? We were at 21,979. Balance now is 22,500 with a equity of 21,700. But I got you. We'll fix that. We'll fix that. We'll get it to 23 soon. I'm saying by this week, I'm taking it easy. I'm not looking for high volume trades. I'm trying to build that cushion so that when I want to enter bigger trades, I have some size and some capital to protect me if it goes against me. Because I'm going to be taking bigger trades. It will matter if it goes against me. So I need some cushion. I need a big, big cushion. Yeah, 5 minute. Yeah, pretty much. Unless we come back under this candle, this one, I think we're good to go up. I definitely, I'll say we'll just keep going unless we come back under here. So unless we're over this candle, we're good for buys. Our buys will be fine. Because I might want to hold it into New York session. Because if I do exit this buy, how's it gonna respond in New York? That I don't know. But let me extend this from where it was. It was here. We're just breaking out of it just in case. Weak magnet. I don't like the magnet feature. I'm precise with how I draw it. This is bullish. I would never want to close here, even though it's nothing. You would think close and it goes back down, but you went down, you went high, you went lower, you went high. You didn't go lower. You went low, but not lower. And now you're going to test if you're gonna break this high and this high. If you do, you're a confirmed uptrend, and you follow the trend. That's what we were seeing over here for this to continue. But it's not about if you're right in terms of hey, they're moving in your favor instantly. It's about do you understand the market condition that it's more inclined to want to go up from here, especially after seeing an impulse candle like this. That's how I'm thinking. But we can close it here. I'm not gonna lie, to be honest, it's risky. But if we close it, comes back down, woo, that'll be real nice. Not worth it, not worth it. I ain't gonna lie, not worth it at all. I'll be like a fish out of the water. Don't know what to do because that wasn't part of the plan. Part of the plan was to take it into this range, here, between between this white line and this green dotted line, like around here. Get like a rise, take the profit, reject, because then we're in the same situation we were with this position, but with what? With more money. Because we made two trades in profit in between. We took a short here, we took a buy here. I like hedging because it forces you to enter positions, and more of the time, if you do it right, you remain profitable. There's your breakout. Okay. I'm liking this 30 minute. I'm not gonna lie. This 30 minute is looking lovely. How this candle just closed or opened right on this body and just kept going. I want to see that maintain. If it does maintain, bust down Rolly Plingen. But let's see, let's see. Maybe we close it. Can take some risk, but it's just too bullish. It's not worth it. It's not worth it at all. That's even more risk than me entering short here or short here. This would be the most riskiest part. Closing this buy here after seeing nothing but building to continue to the upside. But if it does reject, it does reject. I am sticking with it's gonna be bullish, and I want to close it at least. You see this wick? This one, two, and then this. I want to close it at least there. So I'll just put the take profit there just in case I'm away, which I will always be attentive. I have alerts connected to a speaker, but potentially way higher than this. Maybe we go even up to the previous high in New York, which is why I'm saying I might want to remain hedged. Oh, there's a big move. Nothing's telling me this is gonna slow down, right? So I'm just moving my take profit away. Let's grab it up to here, right? Maybe we get a double top confirmation or something like that. Yeah. This is good to hold, man. It's 30 minutes, real nice. 15 minutes, nice. I like it. I like it. I like it. It's nice. It's a curve, you know. It's like a bell, like this, or like this, or something like that. Could even go backwards. Yeah, but pretty much. Hello, everybody. Today is your forex teacher, عوني زكي, and your other forex teacher, محمد محسن. اه هنعمل فوركس وعايزين نعمل الجولدي باي شراء على الذهب يا باشا. اوف 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 اوف. Pooja, what is this behavior? You're asking for it. You're dying for it. يلا يلا يلا. بروفيت، اعطينا البروفيت يا ولد. نبي البروفيت احنا. بروفيت و صلي على النبي. يا سلام, look at this close, 15-minute close. Should we close it here? Yeah, let's get out. Let's get out. Look, I don't care. This continues to go up here. I was fine with 1,400 loss. I don't care. I don't care. Because we're at the same amount of loss, but guess what? Today, we made 900. We made 900. And in order to actually make that 900, because now we're at break even. 100 minus some, yani peanuts minus, okay, nothing. This might continue to drive up, might even break, but if it does, it's okay. We secured more capital for a cushion. This just went up really quickly, so I'm thinking like there's an hour and 15 minutes before New York. Come back down here, at least retest this, come back into the consolidation zone,
And then what do? We close this. We close it, and we'll have 600. Ya salam. If not, let it break up. I don't care. I'll hold it. You think I'll close my position? Do you فكر أنا كوف? You think I'm scared? لا لا حبيبي, it's okay. Market is an oscillator. It's gonna wave. It's gonna wave. It's gonna wave. So, pretty much, I'm gonna sit, do my studies, set my alerts around here. I will keep the stream open until I figure out what I'm gonna do with this position. I'm most likely gonna leave it. Uh, I'll watch it maybe through New York, maybe keep the stream going, whatever I feel. But what matters is what I feel now. For now, I'm keeping it open, right? This is very bullish. This is very bullish. If you notice the 30-minute, this is something really interesting. Look how it's close to the bodies. Look at the moves now. Look at the moves now. It's gonna be very volatile. Look, it went above the bodies. Now all it has to do is take these wicks here on the 30-minute. Right? I'll take out this because it's useless, this little trend line. It's nothing but noise now. Take this out. No, that's my order. I can't take that out. But look how the 30-minute is above this candle with no wick, and above this candle's body with a huge. How big is this wick? 13 pip wick. So if we take that up, oh, that can easily drive up here, make a new wick, and then come down. Do the exact same thing. Maybe we can find another short and come back down. Even more profit in the position. So there's many ways we can handle this, but what's important is we adapt and we look at what we have now. What we have now is this big gap, this big wick, and we're expecting volatility between this wick because this is an imbalance. When you're approaching wicks, you're approaching an imbalance in price, right? And when price is imbalanced, the buyers and sellers are imbalanced, we get implied volatility incoming. Because it only takes one person or a couple of people to come in, a couple of buyers or a couple of sellers to come in to influence the price into one direction. Right now it's to the upside, but to influence it further to one direction. But I like this break. 3 candles. Now it's time for a nice little retest, or it just keeps ripping. But if you notice, how big is this candle from body to body? 5.8 pips. How big is this candle? This one right here. 5.9 pips. 5.6. So around 5.8 pips for each candle. Now, what do I expect this to do? If this doesn't make another 5.9, 5.8 pip, which is here, 2038.8. Let me put a horizontal line. 2038.8 here. If this candle somehow doesn't go here, I'm going to conclude that this is weakened. Now, what I have to say is, how are sellers and buyers responding to this weakness? Is this going to be some sort of double top, which is where we have a pattern like this, we come down, we get another top, and we come back down? Or is it gonna wick up another 5.8 pips from where we measured it from the body and gonna continue driving? Now it's up to the market to do that, not up to me. I am a little fish in this market right now. Pretty much. That's what I am looking at right now. Hour closure in 9 minutes, 10 minutes, 30-minute closure, 9 minutes, 10 minutes. And we're gonna analyze that closure. What we would want to see is this close above this candle, close above these bodies here. I'll indicate strength, bring more buyers in, drive the price up, and boom, we can break up to the wedge, to this trend line, and price can do whatever it wants there. But for now, it's here. 30-minute, what do we want? Same exact idea, nothing different. It's just 30 minutes instead of an hour. We want this within the next 9 minutes to close. Can't move down. It can't move down 2.6 pips. It has to remain up. So imagine like you have a buy here, the stop loss under here. You know, it's kind of like that. And if that rejects, I'd expect weakening, and how buyers and sellers respond to that weakening is what we're gonna find out. We will see in the moment. But for now, we're stuck at one objective, which is let the 30-minute close above the bodies of these candles so we can indicate that this trend is gonna continue, right? But yeah, this is a great position. If this comes down, so this is now 1,200. Where is this break even completely? So that would be 898. If this comes back here to this price here, that's my break even price. I'm not down 1,200 because I made 900 today, right? So, hey, Mullah, is price gonna come back there? Yes, it will. When? I don't know. Is it likely that it happens soon? Yes. Is that for certain? No. If it doesn't, are you good? Yes. Would it still come back if it goes higher? Yes. How do you know? The market oscillates. Simple as that. Just simple as that. And above here, hedge. Khalas, hedge. I'll be at 2,300 loss minus 900. So it'll be around 1,400. Right? Loss. Hedge here. Same exact thing. Close that for profit. And then continue. And until it starts breaking the trend and stops going in an aggressive uptrend. We're good. We're good. But let's see the 5 minute. Let's see how price is responding to this zone here. Maybe I look at it tomorrow and say, no, this actually was decent price action. Big move just now. Big move. So yeah, that's what we're expecting. It's a pattern. 5.8, or where was it? It was the 3 minute chart. Let's stay on the 3 minute. Here. 5. No. Here. Where is it? Yeah, from body to body. 5.5 pips. Here, body to the top of the body. 5.8 pips. Here, body to the top of the body. 5.9. Let's take this body to the top of the wick. 4.2, 5.5. So we wanted this candle actually to close here, but it's showing that it's bearish. It's red, right? Here you're getting a little hammer. Would this be a possible top wick? Maybe. We reached our region of 5 point whatever pips, 5 between 5 and 8. Now we're gonna look for a weakness. And how do we identify weakness? Are these candles here smaller than the ones here? Yes. What does that mean? There's less buyers. Okay. Does that mean there's people shorting? No. Does that mean there's possibly less people buying? Yes. Doesn't mean there aren't people shorting, but you can't just say, oh, it means people are shorting. No. People can be taking profit on their buys. That counts as a sell, right? Go to the 2 minute, made a wick here, go to the 1 minute, right? See what's happening with the candles from a local level, right? If it doesn't bounce from here, then I'll expect it to go under here, and then we can determine how aggressive price is moving. We can determine whether we stay or determine what we do. But we have options. If we take it down at least here or break even, I think even higher. Where's break even? Break even is here. So like let's just say this week. But yeah. There's this weakness we're talking about. We saw the first red candle. Let's go back to the 3 minute to maintain understanding of this pattern. We saw the first red candle. Size of the candles relative to the breakout. It was 5.8 pips. It was consistent, algorithmically maintained, right? Exact amount of buyers. All of a sudden, we have one red candle indicating weakness. Next candle, big top wick. Weakness up to the zone we expected it at. Picked up the sells. People took profit on their buys. They realized it's the same standard deviation within the candles. The next candle after that, down. What are we looking for now? In terms of weakness, to confirm our weakness further, is to break under this wick. Is it because it can come down, pick up orders, and do what? Go back up. But We have to wait for it to break first. We have to look at the spread. 1.7 is becoming higher. Buyers and sellers are leaving. Unless it goes to 1.2, that means it's more consistent growth. You see? Now when it starts moving, you get the smaller spread. As soon as the spread becomes bigger, it implies volatility incoming, which is what I noticed. New York session in 1 hour, 1 hour closure in 4 minutes. So yeah, it's a good day. It's a good day. It's nice price action. I'm not gonna lie. It's a nice puzzle. I like to solve. So from yesterday, we're only down like 100 or 300. No, where? How much were we? 21,900. Yeah, we're only down like 300. But now we're only down like 200. Sir, do you have $200 I could borrow to gamble in the stock market? Yes, indeed, I do. اقسم بالله ما عندي سالفة. خليني اركز خليني اركز. Nah, New York's gonna be very volatile tonight. But I'm setting alerts and I'm walking away until we're above this zone. This 5.8 pip from here, or whatever it was. But yeah. Check on our 1 hour closures. See what happened. 30-minute closures are 15. Did we get what we wanted? Yep, we did. So we got the break. Not really what I wanted, but we expected. Gotta be realistic, okay? So this body of this candle here closed above these two. The body of these two. That's the what I'm taking note of here, okay? The wick isn't that big. So I'm looking to fill the rest of the wick on that candle, which isn't much, and then we can see what happens after, right? 30-minute, same thing, closed above this wick. So now we're looking to see how this candle responds to this wick. Is it gonna pick up orders and drive up to the next wick, which is here where we took our previous short, make a double top? Is it gonna wick up even higher and not able to claim the high of this and then dump until New York session and then start driving up? Is it just gonna start dumping from here and reclaim half of this candle since this was a big move? Now, what I think is gonna happen, let's just see the 15, and then I'll start to see what I think. Yep, okay. So this possibly could be a top wick, but I do want to see actually one more wick, and I want it to be an aggressive move. If we get an aggressive move to the upside, it just influences buyers to take profit the same way I took profit here, same way I took profit on my short here. You're not gonna catch all the move all the time. But that's why you back this and you review your trades to see what you can do better. But for now, it's what it is. We're still not up to that horizontal range we drew, which is one standard deviation of the candles. And as I'm speaking, we are. So we're gonna take this out. We're gonna make one big wick, just like this over here, where we let's see what that looked like on the 1 minute, just so you can visualize what we have to see again. Right, right here. One, two, candle opened here, waked up, next candle, red. And how do we know it was gonna dump here? Because, well, we knew it was more likely to dump here. And we took the risk of taking a trade up here and closing it in profit. How do we know? We looked at the 3 minute and the 5 minute and we looked for the candles to start weakening, right? Here you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 45 minutes. 9 candles, you got one red one. All of a sudden, flipped completely. Here, 1, 2, 3, 4, 5. This is the biggest. This is smaller. This is even smaller. This is even smaller. Now you get a red one. Now, what I want this to be is to be a short squeeze. So I want this to go up even more and come down, and we get like a long wick, like some skinny guy with a long neck, and we just come back down, and that will be our local top. Make a double top, come down, or we break this high. But for now, that's what I'm looking for because I am biased. Of course, I'm biased. Gotta be biased, man. Shouldn't be biased, but just be realistic with yourself. I know how to be realistic with my trades. So that's what we're looking for. We're looking for a big wick, right? Maybe we can draw a trend line like we did before, because that's what trading is. It's replicating what worked for you before. And I said, I drew it on the 5 minute. Yeah, it was pretty long. And I said as soon as it broke and closed under it, I am confirming a little short. So if we go to the 5 minute here, let's see if we can get anything. Yeah, we got that big wick. Now we want to see it confirm under there and close. Let's look at our 3 minute. Alright, let's prepare ourselves to take a trade. Because I'm a trader. Trader. Damn, are you a trader? Yeah, I'm a trader. Okay, very obvious. It's very obvious now. Think we're gonna get one more move up? I don't want to just impulsively enter. Nah, I don't think I would enter that. It's moving too much. I would have wanted to enter on one more wick up over the trend line. That would have been beautiful. But support broken. Big dump. Man, like Yani, there is nobody watching this. I am the only user watching this. Bro, tell me one person who's sitting there telling you exactly what price is gonna do. Ta'al, I know it's weakening. It's going up too fast here. What I think it's gonna do is make a wick. We're gonna replicate the exact same thing. We drew a trend line here. As soon as we saw weakness, we looked for a big wick, break of the trend line, confirm for us to short. Habibi, yalla, yalla, yalla. Let's do it. Let's do it. It's going back up now. Wait, 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 wait. Wait, 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 wait. Still not confirmed, but man, today, this is what I'm talking about. Flow state, man. We got a flow state. I can read this market like a book. That's what you want, man. That's experience. For people, this is just green and red. But for me, I see the movement, man. I see how it's moving, what it's responding to. I know what important regions it responds to. I can classify why it's an important region of response. Pretty much. Wallah. Look, 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 look. Watch this, watch this, watch this. Next rise will enter short. Next rise will enter short. You know what? Let me put my sell limit here. Up. Don't take me with you. Take me with you. Come on, take me with you. Take me with you, yalla. Maybe put it a little higher actually. I think it's gonna wick like crazy. Put it here, put it here. Here, yep. See this one, two, I'm expecting it to make a third one go up or just completely say, you know what, nah, I'm just dump it right now, man. But because this one, two wick, maybe like a retest on this little line, and then we enter boom shakalaka. If this is a double top, if you look at it and zoom out, it's just very obvious. But it's obvious until it isn't. For me now, it's obvious. And I don't work with what I think I'm gonna get. I work with what I have now. And now it's telling me weak. Weak. Bro, I might just mark it in. This is. Man, it's taking its time. But I know if I mark it in, this is against my rules at this type of price action, and I don't like going against my rules. So I'm gonna wait for my order to hit and wait for this little retest. Because I could be wrong, and I want to minimize how wrong I am. You know, this I will use the word wrong because we're entering what's it called? We're entering the second position. Want to minimize the margin for mistakes, but how is it responding to this level here? Okay, I think I just might mark it in right here. Yep, I'm gonna mark it in. Screw it. Uh, remove the order. I just didn't like how it wicked and here, 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 because I'm gonna take this trade with the same style I always do. Is if it goes down, I will put stop loss to entry, and that's it. So for now, we'll see. But I'm excited for this trade. I'm excited to see how it turns out. I reckon we'll know in the next like 10-15 minutes if it wants to go continue up or continue down. Continue up or reverse this micro trend down. Because if we do take this out, yeah, man, it's fine. It's fine. That's not that doesn't hurt too much. Well, yeah, now we wait. How price responds to the middle of this candle, because this was a big candle. Okay. I like getting wick entries, but I thought that would just completely reverse from here, from this. But I like to get my wick entries closer to the high. So if it does go there, it's fine. But the reason I entered here is just look at this. You had this one wick here, here, here. It's just like this is the range to the average range. This I consider an outlier, you know? So if it were to reverse, I would think it's more likely for it to reverse around this price. Confirmation dump here from this micro trend. So as soon as the price crosses here, right where we took our profit of our buy, this stop loss is going straight to entry like this. I won't put it now because of slippage and just might pick up my order and drive to where I want. Um, and we just wait because you see how we identified this inverse, this big inverse head and shoulders, left shoulder, head here. Now you have a little mini head and shoulders. So you have the left shoulder, the head, it's making the right shoulder. So if this breaks down here, it's going to confirm at least we'll go to where exactly what we've been doing the whole time. The next consolidation zone. Where is that? That's this region right here. Here. Here, here. Anywhere other, there's just volatility. Down, up, down, up. Here, consolidate. All consolidated before. Here, down, up. Here, consolidate. It consolidated here before. In between. You know, it's not exact, but it works. That's how I think. So I want this to close under here so we can confirm that this is a head and shoulders. Put our stop loss to entry. Leave it. If it comes down here, that's extra 400 and this will be at a 700 loss. So we will add what's it called? Will end up being 1.3 net. And then if we close it or leave it, depending what happens, it'll be like 700 net. But that's if it closes here, because that's just completely up to the price. That if it closes under this region, that's the next super important step. Plus our 15-minute closure, coming very close to New York session, around 45 minutes exactly, around 45 minutes. Yeah, wait and see. Patience. Because what we don't want to see is a continuation. So we have a little curve here, goes up, a curve, and then this curves up higher. So this is just means it's kind of like a little, like an opposite of this, maybe, you know, like a little bull flag where it goes up, messes about for a bit, then continues up to the high. You know, we wanna, if this does go up based on a pattern, we want it to go up as it did, come down, go up, come down, go up, get a wick, come down, and then just trickle down, you know, like that, as we did here. You want to rise, suck all the buyers in, as soon as you come back into this range, stop losses are going to be hit throughout, especially down here, and then you get an aggressive move. That's what I'm thinking. What are you thinking about? 15-minute closure. Let's check that out. Okay. Remember last 15-minute we said, hey, it closed above the body. If it did. No, the 15-minute didn't close above these bodies, right? We made one wick, and this is what we just talked about on the lower time frame, 1 minute, 2 minute, whatever it was, that we wanted to make one more wick. If we do make one more wick, I'll be super bearish. Might even enter more, but that's a big possibility. If we don't, this is our one, two. Look at the bodies relative to the rest. We had this big brother candle come in to save the day, take out that buy. Body is getting smaller. Body is getting smaller. Wicks are getting bigger. Volatility is in. Here, there's indecision. The candle opened a minute ago, a minute and a half ago, and it's not moving much. There's indecision. So what indecision is imbalance, which leads to imbalance. Sorry. So then we get volatility. So we want to see a. Listen, you don't want price to go up when you're shorting, but if you understand that price can manipulate people to buy and then have stop losses hit in the future, that will induce like a chain reaction, even that will get you to even lower price. Because if it just goes down now, there's gonna be a point where these guys are gonna say, "Hey, okay, let's just take profit and just go up." It seems very fair. But if you have impulsive moves, you have emotions set in, you have a playing with people's psychology, and that's where volatility happens, and that's where the serious money and the good money is made, where you get the good trades. So yeah, let's just stay on the 15 minute. We know what we're expecting. We know what we want to see. Wait until our next closure. See if it makes any wicks. See if it does anything else interesting. Maybe it just dumps. Maybe it pumps. Maybe it does the crump. Maybe it crip walks. Maybe price goes backwards. Maybe. Well, like you can't play music. Yeah, okay. Oh, I just looked at it here. Yeah, so we did get a dump, a little tiny dump. That if you're trying to do the Afrikaans type of trading, you have to make sure that people understand that as a South African, as a boer, you got to make sure that you have the Afrikaans spirit inside you. انزين لا تفلسف الحين but yeah, so we're testing this zone now. It's just a simple game of support and resistance. Support, resistance, imbalance here, here, here. It's gonna bounce here. It's gonna reject here until it doesn't. And then it gives us an implication of where it wants to go. And we utilize that information to adapt and manage our risk. Man, this trading stuff, once you figured it out, it's so boring because you know what you want to see. You know what to do next. You know what you're gonna do. It's just but beginner traders, when I first started out too, man, I would stare at this MACD here, RSI here, stochastic up there, Bollinger Bands, VWAP, Ichimoku Cloud, although I still don't even know what it does. Man, I would have everything up there. Crazy. But now it's, hey yo, what's happening here? Did it move? I swear, where simplicity reigns, let not complexity trespass. Keep it simple. We want to see a close, because if we close, you see how the spread's getting bigger? 2.2. 2.2. Massive volatility coming in. Either it's just going to bounce up or it's just going to rip down. But I'm telling you, in the next 2 minutes, you're going to see a 5 pip move. 5 pips. 5. In the next 2 minutes. That's my bet. Okay, the spread's becoming smaller. I feel the candle coming right now, just surprising everyone. It's not moving at all, especially after it rallied up this much. It's just not moving. People are waiting. Hey, is it gonna bounce? Is it gonna continue? Is it gonna break? Is it gonna hit my stop loss? Okay, there's 1 more minute until the 2 minutes ends. And if this closes under here, forget the green line. If it closes under here, stop loss is to entry. Okay, 40 more seconds until my 2 minutes is done. Oh man, come on. I know you want to do it. It's so obvious. It's gonna move like crazy. Either gonna surprise me and just keep going up or dump like crazy right now. Right now. in the next 30 seconds or 20. Look, you see how I made two wicks? One, two, and here made one, two. Come on, 10 seconds. Okay, not a 5 pip move, but I moved. Not really. It moved like 2 pips. Miss Yalla. It didn't close under. I'm waiting for this to close under so we can go to the lounge down under.
Right, all mate, trying to get in. Fucking go, try going on. Yeah, sure, go, mate. And you're trying to make sure that you, as a trader, want to make sure, yeah, that you're shorting the right prices, yeah.
Look, it's not moving. Yalla. I just want to put my stop loss. I want to continue reading my textbook. Look at the spread. Look at the spread. Two. And we've been down here for too long. Now I'm expecting it to rise. I ain't gonna lie. It's just been stuck in this range for too long for a buyer not to come in and just take it out. I hope I'm wrong. Don't get me wrong. But I'm being realistic. I am being very realistic. You gotta be real with yourself. When's a 5 minute close? Is this lagging or something? Am I tripping? No, it's not lagging. لا. اي lagging انت عطني يلا انزل خلصني انزل يلا حبيبي ايه كذي زين. Did it close؟ ولك هذا شنو؟ هذا close. يعني ناخذ ستوب لوس ونحط الستوب لوس على البريك ايفن عشان this is a free trade now. حطها هني يلا سوي اللي تبي ما لي شغل فيك. لا تسوي اللي تبي انزل يعني بس يعني خليك وياي يعني انا صاحبك. يلا مان. اقسم بالله قاعد اكلم نفسي كني مجنون شي رايح فيها مجنون. Like if you showed me a video of myself to my younger self اكلم نفسي على كمبيوتر فاتح لايف على يوتيوب ما في الا واحد و the one person is me ما صدق. اقول لك لا هذا مو انا هذا مجنون. شوف okay this is what we want to see. Our 5 minute. Remember we always talked about the three candles from like here, the three candles من هني. I've been on this live for too long now. We want to see three red candles of the same size. لا مو كذي. يلا زين كذي. هذا 5.6 هذا يروح يسكر هني بعدين هذا يكمل عليه هني. It goes down from here. Okay. What's important next for me is our next 15-minute closure. The 15-minute closure is gonna tell us a lot. Ah man, this is starting to look it's reclaiming it. Cause remember what I said about how I wanted it to go up from here? It just stayed in this range for too long. This for me is too obvious telling traders, oh it broke short, yalla short. And then they short here, they have their stop losses like here or wherever, and it goes up. Because it just waited too long over here. It waited too long. So what I might do is take this and put it like even higher, show you just in case the spread messes around, you know, like this, yeah, like this. Come on, man. It's really indecisive here. It's showing us it's gonna get seriously volatile really soon, yani. What happened? Remember last time the 1 hour closure when we started moving a lot? We have an hour closure in 5 minutes. In 5 minutes. 15-minute closure in 5 minutes. Maybe this gives us the volatility we need to keep driving down and persevere and كمل on the straight. Continue, keep the straight going. Right? Yeah, this is bullish now. Look at this spread 2.2, man. If it just moves up here, it's gonna increase and just wick me out. Like, I don't even like stop loss to entry here because yeah, it closed under, but يعني barely. One minute candle closed under. The other one closed here. This closed here. It's like an outlier. But who am I to say it's not gonna just keep driving up? And of course, I want to protect my position. Look at the spread becoming higher. Look at these guys, man. How much? $6. They took it. راحت الفلوس خلاص راحت فيها راحت. Okay, we don't need to look at the 1 minute now. We're back to the same old boring price action. Bro, I don't even want to trade anymore, man. I am tired. I want to go sit. I'm gonna get something to drink. Hola, wait, what's going on here? Man, are you sure we don't have news? خليني اتأكد tomorrow ما ادري today ما ادري شنو. Durable goods in an hour. Man, I don't want to be in a position. Oh, New York session open. I'm in a, what's it called? Like an early London session. Yeah, early London session short. Man, this is not a good idea. But if it does, same plan. It's we still have our same yani, same zone up here. We do expect it to go to if it does want to climb yani. Oh, this is a hard one. I am trying to figure out if I should re-enter. It's like a hard game of chess right now. Yeah, 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 yeah. Look, I want to enter, but if it goes against me, I don't want to risk the second position. I'm treating this like I have a big size. I don't want to risk entering the second position into New York, which is in 30 minutes, and then in another 30 minutes we got news. How much news? One, two, three, four, then 25 minutes, 30 minutes. Fed bar, yeah, leave fed bar. I don't care about anyone except Powell, man. Left shoulder, middle shoulder, right shoulder, possibly. Then we drive up. We'll see. This is why I didn't like stop loss to entry when only one tiny candle closed under. If it was the size of these two, like here, oh, it would have been easy. But because it was such a small candle, it gives such a high chance for price to retrace back up to this local level. But now we know that this level is important. So if it does want to go up and it breaks this, it's going to be volatile. Or just be volatile nevertheless to whatever direction when it reaches here.
But zoom out. When in doubt, zoom out. Look at the 15. Big wick. Okay. Big candle. Big candle. If we close under here again, and especially under this candle here, we'll definitely drive down back down here, which is how much of a loss here? 613. Wallah guys, يعني ما أدري. We'll see. We'll take it out. We'll leave it. We'll buy again there. Whatever. But at least we earned more than yesterday, and we learned something. Yesterday 21,900. So if I close here, that's 22,100. Made 200. Sitting here, like imagine sitting here for this long. I usually trade New York session, but I'm in a different time zone now, so I have to adapt. I can't just stay up every day and try to be responsible in university. It doesn't work. It doesn't work. Balancing. I gotta make sure I sleep well. Possible get another entry here, but we'll see. New York session is in 23 minutes. I'm gonna remove this trend line, okay? And I'm gonna restructure it like this. It's a different trend line, it's not the same one. I'm going to leave this. I will remove this. Let's declutter this. Let's declutter. It's too steep for it to be relevant to anything. This I will keep. This I will extend a little bit. So now we have a little wedge. Let's just try to pinpoint it. Okay. Now price can come down, bounce, come down, do its thing, and then here you have volatility either here or breaks down. But nevertheless, if we do go there, that's a 400 loss on a 900 day. That's 500 up. You know, it's like what, like 2%, 5%. If it was 1,000, it would be five, so 2.5. Yeah. If it was 2,000, it's 10%. If it's 1,000, it's 5%. It's 500, 2.5%. So it's 2.5%. I'm gonna tell you something about compounding. Compounding your account 2% every day will make you a millionaire in no time. Well, let's actually do the math. Look, look, look. Compound interest calculator. Okay, I love this website. All right, we get 20K, 2% for 5 years. 2% what? Daily? Daily? No additional deposits. You got my friend. That's a big number. Billion, trillion, quadrillion. Yeah, pretty much. But you want to be reasonable. Let's say like weekly. That's still absurd. But yeah, if you can make an algorithm that does this, dump 100K into it, you trust it. How much is it? 14 million. يعني تكفى. It's a lot of money, man. Man, if this was a double top before New York, something like this here, but without the wick,
or something like here. This was yeah. This was this this is where London opened. I think New York opened like here around this region. Oh, that would be nice, man. It sucks how that got stopped out, but how do I know if it didn't take it and just rally up? I don't want to be in that position. مو حلوة. 15-minute close in 3 minutes. New York session, another 15. 'Once again, it comes down here. Wicks comes down here. Wicks comes down here. Wicks. Is this good for us? Is this bad for us? I'll only know if we get like an impulse candle or something. Because if you look at the 1 minute, this can flip easily. It can easily flip. You come down, you come down here again, but then there's more buyers here. You bring it up even more. You come down maybe higher than these lows, and then you go up again. You just start oscillating. Or you just give us a dump right now. Just give us a big dump right now. يعني إلا you take my order يا ابن الماركت ميكر الحبيب. The price will move in your direction, my friend. I'll call my oil friends and I will tell them to dump oil onto the market. Short, then they will say fake news and then we buy. Take profit. Don't worry, I got you guys. I got you. I got you with the insider trading later. That was a joke and entertainment just in case I got sued. For the one viewer watching me, which is myself. So I don't get sued by that one viewer. Okay, more importantly, let's check our 15-minute close. Important points. Right now, we got 37 seconds until it closes. I gotta stay focused, but I've been focused for a while. We're losing focus, but I don't lose focus. Okay, 15-minute. It's definitely gonna close under here. Let's click our little short button. Let's wait 10 seconds. 5 seconds. 4, 3, 2, 1. Closed. Okay. Now, this candle is so important here. If we drive down to here, I am closing my position. Why? New York is opening in 15 minutes. Do I know what New York has to offer? No. Do I know what the volume in 45 minutes relative to news has to offer? No. Do I want to be in a position and risk just rallying up for whatever reason? No. So, if price comes down here, I'm going to be more inclined to close. Now, what if price comes down here and the news comes out bearish? I don't pay attention to this durable goods. I will eventually in the future, but I'm not gonna pay attention to something I don't fully understand. right? I will eventually fully understand this. But what if it moves in my favor? You know? Comes down here into this consolidation range, which is here, and news comes out. Wick. Close, exit, end stream, goodbye, come back tomorrow. We got 22, like something, 800, 900. Leave. Come back and eat, sleep, and repeat. Yeah, yeah, yeah. Look. This is really important point. I just noticed something. Check out this, my friends. Check this out. You take your trend line on this wick, you draw it with precision. Okay? Now you have a nice little range. Okay? Local range. Now you draw this. Okay? Here. Now you have a wedge. Is this bullish? I don't know. I'm not gonna sit there and go Google a pattern and see if it's bullish. I can do that. Sometimes it matters, but I don't do that. But what would that help you in understanding? Is learning what this pattern is. If this is a bull flag or a descending wedge, and whether that's bullish or bearish, helps you understand that if traders create the sentiment that this pattern is bullish, more traders are gonna recognize, hey, a compounding effect between each other. He recognizes it's bullish, so it becomes bullish. So the other guy recognizes it's bullish, and now you have a bullish market because of this pattern influencing people, right? So what do we have to see now? Is this pattern valid or invalid? How do we know if this pattern is valid? If it's a valid bull flag or ascending wedge or whatever you call it, ascending pizza, it will break out of where it's breaking out now, and it will break here, go up, come down, then break up to here. And then we have this new zone to pay attention to. If it's invalid, it wouldn't be doing something like this. It would come back down and it would break its local bottom, come up and keep going down. And then we're in this support. But what is it doing? It's making your classic Ponzi W pattern. Year one, year two, and then you break out. Would I buy here? Nah. Why? Because we're entering into the session. Why don't I just trade New York volume? What if this is pre New York fake money? Pretty much. But what if this is like some just volatility pre New York, you know? Whoa. What's going on here? Okay. It's actually a good place to enter short. I'll wait for one more wake up. It's still not healthy. Spread is too big to me for me to just enter a trade here. But going back to what I said, do I want to be in another position that is not already in stop loss to entry? No, I don't. I don't. Why? Because what if New York opens in 10 minutes and we just get a rally? We have to take all of the scenarios into consideration. When a short here, it could be a Ponzi pattern. Stays here, New York opens, volume drives it, continues up. It's not nice, not nice. Then you sit there and you know you thought not to do it, and you have rules. That's why you make rules. So you don't be the person that says I should have, I did this, I wish I did this. Nobody wants to be that person. It's not fun. But all green candles, red candle. If this candle closes red, we might be able to catch a short. Look how the spread is 1.1 now. We might be able to catch a short, and it just starts to dump aggressively, and we won't wait for a close for stop loss entry. As soon as we're like 3 pips in profit, we'll just put it in break even, and if it hits, it hits. If not, let it do what it wants. But it just does look like that was a retest, and now it would rise. Remember, we're only at a $300 loss. This is 1,100, but we made 900 today. We made 900 today. Yeah, this is bullish, man. It's a clear retest and rise. W pattern. Rise to the previous impulse candle or previous level of consolidation. Yeah, we'll see and we'll wait.
Right. 1 minute left. We have tons of volatility, but this is what I was talking about. This indication of a little reversal. You come down, you go up, you go down lower, you go higher, you come down, but it looks strong here. You buy here, especially in confluence of this trend line. This is gonna break, but how long is it gonna do it for? I mean, is it gonna break and then keep going? How long is it gonna keep going up for? I don't know, because New York session opens in 30 seconds, not even a minute. So let's just keep that in mind. We have a 30-minute closure soon, and we wanted to close bearish. Maybe if it's not bearish, at least the body of the 30-minute candle under the previous one to indicate that at least we're slowing down. That would mean it also closes red, but doesn't matter when volume comes in. Really, just gotta wait and see. There's nothing we can do now. Okay, New York session is open. Where are you taking this volume? See how the candles just now like up, down, up, down, up, down. All of a sudden, it's just ticking. Spread is high, low, high, low. It's when the big dogs come in. But yeah, let's just check our 30-minute closure quickly. Okay, we closed bearish, but it's just wick, wick. Now we expect this to fill here, but what is it gonna do after? Is it gonna wick here and just go back up like before? Or is it gonna go down and we're gonna get a continuation? So let's just check the 1 hour close. That's a smart thing to do. Did we close bearish? Well, it's indecision, right? But it's still red. But it's just indecisive. Like when you have a candle like that at the top, that's not really like this. It's even, the body is even smaller. Can we find anything like this? Yeah, you see what I mean? It's not red, but same concept. Similar, but not really. Here, and then you continue driving down, especially at a recent local high, a session, when you're at a session high, it's indicative of a possible reversal. Let's go back to our 3 minute. Let's just continue to analyze what they give us. Wick down onto this trend line. I like the 3 minute and the 5 minute and the 15 and the 4 hour is my favorite time. So, are we gonna get our double top? That's what we are looking for. So I'll just move this back to the 15. We did our little analysis, and we just have to see if this is gonna curve up, because right now it's just on this trend line, broke out of this trend line. Is it gonna go up, pick up some liquidity here? Then we can see what happens after. But yeah, yeah. I'll leave the stream on because it'll be interesting to have the loss become a bigger loss, or the loss become less of a loss, go into profit. If news comes out or volume comes in, we'll see, we'll see. But for now, it's alerts here and stay away. And alerts here, of course, at this range to see if it's gonna wick, wick, or go down, make another body. But this is very bullish, especially on open. Very, very bullish. The wick exactly on this trend line. Something a buyer would want to see. But yeah, we'll wait and we'll be back. Man, look at this zone, like right here. This zone right here. How it's wick, 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 wick. It always wicks down from here. Yeah. Okay, 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 okay. What we want to see here is a close of the 30-minute under these wicks, or at least under this body for now. Let's not be too bearish, but we would want to see it under these wicks. But at least under this body and throughout this body, under these two up here, this support, we want to see it close and possibly drive down back here. But for now, it's a waiting game. gonna happen? This is what I think is gonna happen. I think it's just gonna completely drive down to my initial entry and just go up. Or, but I think it's gonna bounce from my entry. And I'm certain now it's gonna go back to my entry. With the way this candle is moving, we can get some serious aggressive movement. At least to here. I see this happening. You know what? I'm sitting here, I am closing this here. I will sit, I will read my book, I will study, I will do what I have to do, I will work towards the person I'm gonna be in life because nothing is a problem unless you don't know where you're going. I know where I'm going. So it's mute for now and stay boss and yalla. because we have news coming out in 9 minutes, I closed half of the position just now. I don't know what news is gonna do, but I took out 300 loss, so on the day we're net 500. If I took it all out, I would be in profit for the day. Now that I'm saying it out loud, is this me being emotional? Why don't I just take it all out? We have news. It's never a good idea, and we're bouncing on this trend line. Wallah, you know what? Although I think we're bearish, I want to call it today because we're gonna come back to other days and just get better price action. You know, even though it's bearish, I want to call it a day. This is how I am. Pretty much. Let's just confirm. Do one little last confirmation. You know what? Yeah, let's just take it out. Okay. So today we made 230. In how long? How long? That's a long time. 6:30, 7:30, 8:30, 9:30, 10:30, 11, like 5.5 hours. But that's how it is. You build a flow state. We 100% analyze price action beautifully. Did we take action on it in the best possible way? No. Did we make money? Yes. Did we lose money? No. That's how you think as a trader. I protected my capital. I did the best I could. Maybe the only thing that I say, that's pretty unfortunate, is this getting stopped out. That getting stopped out flipped everything. We knew this dump was coming. We knew it was more probable, right? But because the 1 minute candle closed as such a small candle, no, it was here, such a small candle, it gave it such a high probability for it to reverse. But if you look at the zone we made, every time price reached this point, it came down. Outlier is this. We have one, it's an outlier. So maybe we should have said, okay, I'm gonna accept a loss because price came one, two, three, four, five, 6 times here, right? I'll put a stop loss above here. I'll lose money. You know? Maybe that's what we should have done. And then because I was doing a little bit of calculations while I was silent, sell limit, 2 lots. If we took it out here, 600 net, that was what? 500 down? Yeah, around 500 down. There you go. You do the math. We would have been good on what we had before. You know? But unfortunately, our second trade got stopped out. Price did move in our favor. And we didn't lose money. We just made less. So what do I learn from these days is that, man, keep being gangster and reading the charts. حجي ما ولا should have done better ولا شيء. To be honest, maybe a good thing I did here was close these. This was awesome. This was awesome. It was between two things because I was dealing with technical difficulties and I knew I was in too much of a position. 246 slots for this little account, it's a bit high and it's a bit overconfident. I'm not gonna lie now that I'm looking at it, but we took it out in profit, and maybe we should have bought here. You know, it was just very clear. That was the only interesting one of the two interesting times of the day where we broke out, clear breakout, where we shorted here, came down here. It started looking bullish when if you check the 1 minute, you could see 3 candles. All of a sudden, we have a buy signal reversed up here. We should have bought up here with a stop loss to entry as soon as it broke this high, which it never came down to. This beautiful trade. We had our trend line drawn really high like this. As soon as it broke, we had our 5 minute candles. There were nine, I remember 45 minutes of straight up, just up. And I'm like, okay, this is unhealthy because if this does come down, it's gonna come down heavy. As soon as it broke, we made a wick. We wanted to find a wick entry. We did. Got the wick, shorted, took profit here, right? And we got this impulse candle indicating to us, hey, there are buyers present. They want to move the market up. So we hedged our position. Fluctuated, fluctuated. We ended up drawing a trend line when we had the rejection here. We identified that it is an actual point of, it's an important point in price. So we wicked here, wicked here, wicked here. And as soon as we broke out, we recognized, hey,
We want to take our price out around this range. And what did it do? It started consolidating where it previously consolidated, right? Which is not where we are now, but higher than where we are now, which was here. Look, price will move and consolidate where it consolidated before. This is done discovery. So, give me a second. So, now, yeah, Habibi, take fire. So now we enter the short after that in hopes to secure all our profits for the day by closing the trade at this wedge here, this trend line, and then this trend line around this zone where it just bounced from. But unfortunately, we did only have one minute candle close under. And I usually just take the 1 minute candle close for a confirmation. And it was great. I followed my rules. But I will for next time take into account the size of the candle. It wasn't that big at all. Let's actually just take a look at it. It was a tiny little candle, which just gave us. It was this one here. One. This didn't close on. I mean, this did close under, but nah. I wanted one deeper. A deeper candle, and we didn't get much, so I just reverse took the entry and eventually came back. But I wasn't, and when we came here, I was thinking of entering short, but because the New York session volume was coming in, I was like, maybe we get a change of volume, a change of price action in which we didn't develop a flow state in. We have to adapt to a new market, which is what I always tell people. It's not about learning how to trade, it's about adapting to the market. It's not about a strategy of what do I do, it's adapting to the market, right? So we didn't take the short because volume would come in and the news is going to come in 3 minutes, and I didn't know where price would be. He was more likely to dump, but at the end of the day, nobody knows, right? So price came down. I closed one lot out of two, so 50% of the position at a loss. Closed a second part at a loss as soon as I noticed it was bouncing and news was coming out. And now we are positive for the day, 230. We learned a lot. We made money. We increased our cushion to how much? 20 to 100. So now we have how many more trading days? Today is Tuesday. We have Wednesday. We have Thursday. We have Friday. So in 3 days, I'm looking to make 900. I'm sure we'll make more than that. If we don't, it's fine. If we lose, it's fine. But what I want to do, my objective now is to build a cushion so we can start taking these big money trades, right? Trading, people say, oh, how much R did you make? Or how many pips did you earn? Man, I don't care. What are we in this for? To play a game? To be the best at trade? No, we're in this to make money. That's the only reason. So anybody who tells you anything else, man, they're just masking something. Why are we doing this? We're doing this for money. We realize this is profitable if you know how to do it. So we do it for money. So we can start taking those serious trades. Like, for example, if we took my usual size, 10 lots, we had a very close invalidation zone. If we go back in the stream, you can see my stop loss when I entered here was right above. We had a very close invalidation zone. Now imagine losing 900. And where do you take profit? You want to take profit next to a previous consolidation zone, like here, right? We had one here. And if we took profit on that at this price, that's 3,000. That's great. That's for one trade, that's money. If you want to talk about percentage of an account, that's more than 10% of the account. You know, we take three, four, five of these trades, we're almost double the account. So, whoa, wait, let me close this. Let me close this just in case it wakes up. Yeah, news just came out. Let's just get one little bit of where orders. I have one order. No, I do not. I put a sell on the S&P by accident. Yeah, but there we go, my friends. Let's see where this takes us. Let's sit for 5 minutes and let's evaluate post news, which is when actual price, see real price, not volatility stopping out everybody price comes in. We're talking about where does the market want to drive this New York session? And what can we do? We can declutter. We can either delete all of these, but we're gonna move on in the day. It's nice to come back to in the future, you know. But if I was back here with this position at a time I want to go to bed, at a time I want to end my trading, I would not be satisfied, right? but you manage your emotions. Don't have emotions when you're trading. No, have emotions. It's good. We're human. We have them. But learn to manage them. Ask yourself, why am I feeling this way when price does this? What happens after I feel this way? Does price move in the intended direction where I think I'm fearful it will go to? Or am I wrong? And realize that these emotions are not just emotions. It's your experience and intuition telling you, hey, there's a break of pattern. We are seeing something now that we didn't usually see this whole time. This is unexpected. It's unpredictable. You cannot follow something that isn't a little bit predictable. I'm not saying predict the market, but we have a sense of probability on where it's more likely to go. Don't try to predict that. Take the data and use it, right? So if we go to the calendar, we see now, see how the GDP just came up? This was not here. This was not here. That was not there. Let's just take a quick look. What happened to the S&P? We got a dump. Beautiful. BTC rising. Yeah, Bitcoin can easily fill 60. But the fact that it didn't make an all-time high when Microsoft, Facebook, Nvidia, Google, Apple, all these different companies made all-time highs, Nasdaq indices made all-time high, S&P made an all-time high. And this didn't still, for me, it's showing this is either weak or money is waiting to come into here, but I don't think that's likely. But if it does make a new all-time high, I'm saying 79%. And the reason I'm liquid Bitcoin, I don't own any of this shit anymore. Excuse my language, but I don't own any of this anymore. Why? Because you always get 75, 50% crashes. Do I know where Bitcoin's gonna be in the future? 1 million per Bitcoin, 500,000, oh, 100,000. This model speculates 250,000 by the end of December. No, all that is speculative. I'm not here to speculate. I'm here to take data and say, what can I do with it? Now, what the data is telling me that Bitcoin crashes 70%, 80%, 50%. So, what can I tell myself? Can I get it cheaper than this price? Can I get it cheaper than this price? Can I get it cheaper than this price? Yes. If Bitcoin goes to 80K and crashes 50, 70%, we're back in this range. Now we can buy it. If Bitcoin goes here and tops out and crashes 50%, now we're back in this range. Now we can buy it. We want to be looking for buys here, not even here. Here. We're gonna be looking for cells here, here, here. That's pretty much how we think. Right, but back to gold, back to what we know, back to what we know today, because we built a flow state. Let's just see what happened. Anything interesting? No, but we never came back. So if you notice, we bounced exactly on this trend line, in confluence with this trend line, in confluence with this wedge, influencing it to stay up, because if it does break, it's going to continue. So locally, for now, we did a great job. We absolutely executed beautifully today, right? And I'm excited to start trading with more size live so I can really teach people. Because I recognize me making 200 today, I don't know how much was it yesterday. That was today, but it's just hit 12 a.m. Well, it was like 300. That's not attractive. Who cares about somebody making that much? I can be that guy on YouTube who says, "Oh, I made 11 pips, or I collected 40 pips today." Bro, how much did you make? What are you in this to collect pips? You're gonna put pips on your plate and eat the pips? No, bro. You're gonna get money. You're gonna buy some steaks, man. You know, I'm not gonna be that guy. So it's not attractive. So I'm waiting to build that cushion. I'm following my strategy. I'm taking it easy. I'm going fishing, catching these small fish until we catch a shark, man. I don't eat shark fin soup, but we're dining on some trading shark fin soup, man. I'd never eat that, man. It's a big fish. I ain't messing with that fish, man. It would mess me up. Okay? But nah, for real. We're gonna build up the cushion, put on some decent size. Then the show starts. Then we can have some fun. Then we can catch, like, for example, if we caught this buy here, invalidation zone, right under here. Let's just switch it up to 10 lots real quick.
Okay, 10 lots, modify. We would lose 1.7, right? Take it up with this wedge. Stop loss would still be an entry. Breakout, we'll take it out around here. That's 3-4,000. This is what we want per stream, right? And we only lost 1,700. That's around 50% of what we made of the cushion, right? We're not risking losing any money that we didn't make, right? So absolutely beautiful. For now, delete our orders. That's us. Keep it simple. Did we grow? Yes. Is price gonna dump? Don't know. Is it more likely to dump? Yeah. Yeah. Judging by your hour close. 100%. I am very confident. I want to wake up and see gold at least retrace down here. Am I willing to keep my position in? No, because I can just come in the next day and trade and trade and trade. There's no reason for me to keep. You see how we were nicely oscillating through here. All of a sudden, we're like, what is this, bro? What is this? What's going on here? What's this imbalance? As soon as I come in and I start streaming, it starts moving horribly. Come on, man. You know? Here we bought, took it out right here. We should have bought here again. Oh, we did buy there again. Yeah, so that's 1,100 up there. A little buy. But yeah, current month on this account, we are up 1,927. Okay. Little fish. Little fish. This one was a 10 lot one. But I was less inclined to hold it. Why? Because I do want to build that cushion. I put my money in and I take it out. I leave. Trading is not about making money. It's maker and taker. When you made 1,000, somebody lost 1,000. That's why I make sure I stay in my trades. I don't close them for no reason. That means somebody took my money. You think I'm letting that happen for no reason? No, you better damn well know it's a good reason to close if I'm gonna close it. You know? But looking at price action right now, absolutely beautiful dump. Big volatility. Would I like to be in it? Nah. But for now, it's Mullah Trades. It was a lovely London session. New York session. Little New York session. And we'll definitely come back and see you tomorrow. Good night.